A very good morning to all our viewers, and welcome to this webinar on accounting and auditing of externally aided projects in India. This webinar is being organized under the aegis of Committee on Public and Government Financial Management. I'm Seema Girotra, Additional Director and also Secretary to this committee. In this committee, basically, as we know that the institute is a partner in nation building, and through this committee, it has been our endeavor to improve the accounting and financial management. For this, we've taken various initiatives, like we are doing the capacity building of various government departments. We are also providing technical support to GASAB and also in various documents of the government. And we also have a certificate course for accountants of panchayat and municipal bodies, which we have organized jointly with the Office of CNAG. And we, from here, the committee, we are also running our own certificate course on public finance and government accounting. In this certificate course, we had till now 16 modules, and this was open to members also, and various government officials are also conducting this course. So what we thought was that based on our various interactions with World Bank and ADP, we thought that this is an area of accounting and auditing of externally aided projects where we need to really strengthen the skills of our members. So we added a new module in our course. There were earlier 16 modules, now 17 modules. So we also thought that we hold a webinar wherein we could also update our members in this area. It's a matter of great honor and pleasure that we have today with us two experts in the area, CA Sumit Abaroy sir and CH Suman Chaudhary sir. So we welcome you to today's webinar, and we also thank you so much that you have agreed to share your time and your expertise in this area. We are honored to have you in today's webinar, and our members would surely benefit by your presence. I'll also like to welcome CA Arun Gupta. He's a co-opted member of the committee, and Sir is today's moderator. A person like him, being a member of the committee and so much knowledgeable, is there today moderating the session. Nothing more good can be there. So, on behalf of our chairman, CA Mangesh Kinnere sir, our vice chairman, CA Pankaj Shah sir, I would like to extend a very warm welcome to all our delegates who are viewing today's webinar, and also to our two of our expertise, Samutaba Rai sir and Suman Chaudhary sir, and also to Arun Gupta sir. Now I'll request Arun Gupta sir to please take over the proceedings. Thank you.
Good morning, everyone. On behalf of the Institute of Chartered Accountants of India, I welcome you all to this webinar on accounting and auditing of externally aided projects in India, that is being organized by the Committee on Public and Government Financial Management. About externally aided projects, about the theme, externally aided projects play a significant role in India's development agenda, especially in areas such as infrastructure, health, education, agriculture, and rural development. These projects are financed by the international development partners like the World Bank and Asian Development Bank, amongst others. As these projects involve large financial inflows from external sources, they require a strong framework for financial management, accounting, and auditing to ensure transparency, accountability, and efficient use of resources. The effective implementation of accounting and auditing practices in EAPs requires a coordinated approach at all levels, from central ministries to project implementing units, etc. PIUs must ensure timely and accurate recording of financial transactions using systems like PFMS, while also maintaining proper documentation to support each expenditure. Regular reconciliation, internal checks, and compliance with procurement guidelines are essential to meet audit requirements. Uh, Audit preparedness must be an ongoing process with periodic internal reviews and prompt responses to audit queries. This refresher course is designed to enhance the understanding of financial management, accounting, and auditing practices in externally aided projects. It aims to equip participants with the latest tools, standards, and system updates, ensuring better compliance, transparency, and accountability in project execution. With improved capacity and coordination across stakeholders, we can strengthen the overall effectiveness of EAP implementation. I am confident that the webinar will go a long way in upgrading the skills of the participants. Thank you. Ladies and gentlemen, before I invite the chairman for welcome address, allow me to briefly introduce our two eminent speakers for today's session. CA Sumitaba Ray. He is MCOM FCA, a practicing chartered accountant with 27 years of post-qualification experience in financial audits, taxation, and public financial management. An alumnus of St. Xavier's College, Kolkata, and postgraduate in public financial management from Annamalai University. He has been deeply involved with reform implementation in the government and municipal sectors across India and abroad. Mr. Ray has consulted for international development institutions such as World Bank, Asian Development Bank, DFID UK, USAID, and JICA, contributing to projects on local body accounting, budgeting, financial reforms, and revenue management in over 20 Indian states, and with governments of Bangladesh and Nepal. He specializes in local body revenue mobilization, budgeting, and fiscal planning, computerized accounting systems, and sustainability strategies for government systems. Currently, he is working with Dhaka South City Corporation, Bangladesh, uh, under a World Bank project. He is a regular faculty of ICAI's CP and GFM, the Asian Development Bank, and various municipal bodies, and has even been invited by the Lal Bahadur Shastri National Academy of Administration, Missouri, for national level consultations. Welcome, sir. About CA Suman Chaudhary, he is a fellow chartered accountant, DISA qualified, and holds multiple degrees like LLB, MBA, MCOM, and BCom honors, along with certificate course on concurrent audit of banks from ICAI. He is a special invitee to the Committee on Public and Government Financial Management of ICAI for the financial year 22-23 and 24-25, and a guest faculty at premier institutions including the Administrative Training Institute, Government of West Bengal, Regional Training Institute, CAG, and the National Institute of Technical Teachers Training and Research, Kolkata. A practicing chartered accountant since 2011 and partner at Chaudhary Devnath and Associates, he has served the EIRC of ICEI in multiple committees for over a decade and has been past president of both Institute of Internal Auditors, Calcutta chapter, and Rotary Club of Salt Lake City, Calcutta. His earlier experience includes working as accounts and finance coordinator under the Kolkata Urban Services for Poor project funded by DFID UK and as information manager for the BSUP project under JNNURM. Uh, with the brief, with that brief introduction of our learned speakers, I now have the pleasure of inviting Seema ma'am to deliver the address.
Thank you so much, sir, for your remarks. We'll because it's such an important topic and our viewers are waiting, so I'll request Sumit Abare, sir. So you please commence with the proceedings, sir. Thank you, sir.
I think the screen is visible.
Yes, sir, it's
properly.
visible,
Right.
sir.
Thank you. A very, very good morning to all of the delegates who have join this webinar. Thank you, C. Arun Gupta ji, for kindly introducing the speakers. Also, a heartful of thanks to Simaji and her team, who regularly invites me to for all these sessions. But fortunately, some sessions are repetitive, so I don't have to prepare the presentation always. But today's session is absolutely a fresh session. So I had to spend a few nights. In fact, I was awake till 4 o'clock in the morning today to complete the presentation. It's a niche area. It's an area that where the members of the institute can take part, can participate. And I think the timing of this webinar is very important, as a lot of things are happening in India. I mean, a lot of development things are happening. A lot of funds are coming from the external sources. Internal funds of the country is also growing. So let's hope that this particular session or this webinar is helpful for the members who have joined today. And also, it will trigger some thoughts. I mean, a 3-hour session doesn't teach everything, doesn't explain everything, but it triggers a thought. That's how I believe these webinars should be looked into. At least at the end of the session, we should have a thought that, yes, we have found some points to note, which we can go ahead. Now, the session, as we all know, it's about a 3-hour session, but I mean, 3-hour webinar, but we have shared, I mean, between Suman ji and myself, we have shared the presentation. I will be taking one part and Suman ji will be taking the other part. So let's start. Now, small disclaimer. All informations and everything that going to be presented today have been collected by me, arranged by me. Here, the ICI has no role. Their views are not taken, nor any regional branches. So everything, the articulation, all are personal. So the responsibility is on me. And if anything, if any information mismatch or mistakes are there, then I have to take the full responsibility. But definitely, I have tried my level best to collect and to do a due diligence of all the information that are being shared and presented today. But always, I prefer to put a disclaimer that if you are going to rely on this information, then kindly do a cross check or a double due diligence before you have a full reliance. And also, today, most of the information have to be taken from somewhere. I mean, since it's a subject which is absolutely a legally embedded subject, it's not possible that I am going to generate some ideas and views. So everything has been collected and collated for this presentation. So I have taken all the information from the websites. Somewhere I have disclosed the website address, but not at all places. But anyhow, anyone can find out from the official websites of the institutions. Now, how the today's discussion outline of my first session of the session which I am being told to take is structured. First, we will be doing a brief understanding of the external aided projects in India, because we don't know who are the delegates at the other side, whether you have worked with external aided projects, whether you have any idea or not. So to bring everybody on a same level, on a same platform, we thought that, yes, we explain a little bit on the external aided projects in India. Then we will be taking up the funding pattern, which is also called the disbursement. Now, please don't confuse the word disbursement with expenditure. Disbursement here means what? The funds released by these externally aided agencies. So funding or disbursement, first, that is basically the receipts of the external aided projects that we'll look into. Then how the expenditures are done. I mean, where the expenditures go, how the expenditures are external of the external aid projects. And then we come to accounting. Because for accounting, you have to have the receipts and the expenditure. So therefore, we touch upon the receipts first, then the expenditure, and then come to accounting. But one thing I must tell you, since we are all members of the institute, since we are all qualified accountants, I am not going to teach you debits and credits. It's not my forte of teaching anyone debits and credits and how to prepare a financial statement. This we all know. We will only try to understand how these external projects do these accounting. What are the policy level things that we require, and what are the changes that are happening over the years. Now, first, let us understand what are externally aided projects. Now, before we go to externally aided projects, let's first understand what is official development assistance. Now, India received official development assistance for official purpose, for development purpose, and this is an assistance. That's why it is an official development assistance from external funding agencies. Now, there are various external funding agencies, which includes the multilateral development banks, the bilateral agencies, and certain institutions. We'll come to the details later on. Now, how these ODA or assistance come? It usually comes in three parts or in three types: loans, grants, and technical assistance. Now, let's understand technical assistance. Technical assistance are very small amounts being provided by these funding agencies for certain specific technical requirement, like a study, a feasibility report, some mapping, etc. Grants come for certain purposes, which are mostly for the development or social development purpose, which the external agencies doesn't expect to get back. That's why it's a grant. Loans are loans. Now, here loans can be of two types. One, an interest-bearing loan, and a non-interest-bearing loan also. So don't confuse non-interest-bearing loan with a grant, because grants are never to be repaid. But non-interest-bearing loans also have to be repaid, including the interest-bearing loans. So we'll come to the details later on. So these are the three types: loans, grants, and technical assistance. Now, where from these usually comes external funds? As I said, from the multilateral agencies. There are certain multilateral agencies, not all are banks. And there are multilateral development banks. So usually we call them MDBs. There are bilateral agencies, and there are other institution agencies. So these are the three definite sources. I don't know whether there is another source available or not, but usually these are the source there: multilateral agencies, MDBs, bilateral agencies, and other institutions and agencies. Now, where government of India use these funds? Why they are taking these funds? One is externally aided projects. So externally aided projects is a part of the external funding. Today, we are only going to discuss about externally aided projects. But if you look at or if you understand the external funds that India gets, one part goes to externally aided projects, which is definitely the lion's share. Now, why? Now, what we do with that in these external projects, basically for the infrastructure development and for social development purposes. And there definitely there will be a process of reimbursement, receipts, etc. And accounting becomes very, very important for external aided projects. The second way how Government of India uses this is giving concessional finance under concessional financing schemes or the lines of credit to other countries. Now, these other countries, or maybe smaller countries, they cannot access large funds from, say, these external agencies because of the credit rating, because of their other factors, etc. So Government of India takes those funds and then gives loan to these partner countries. Now, usually loans, because obviously Government of India cannot give a grant out of a loan that will mismatch the fiscal responsibility. That's to be ensured. So they give a loan. Now it can be a very concessional loan, it can be a very nominal interest bearing loan, etc. For the development of those countries. Okay. And the third is the specific sectors, like Government of India using some of these external funds for in the educational loans that the banks are giving through their credit guarantee fund scheme for the educational loan. So under this credit guarantee fund scheme, Government of India provides or puts in some of these external funds over there. So these are the three areas or three, we can say, broad utilization where these money goes or these external funds go. Now, a question comes: why do we need an external funding? I mean, we in India, we have a lot of funds, we have a good buoyant economy, etc., etc. But why we go for that? Now, number one is that, like Government of India can borrow money, state governments cannot borrow money because they are not allowed by the Indian Constitution. So when state governments cannot earn money, but they need funds, which immediately government of India cannot share, at that time, Government of India gives a sovereign guarantee to that loan. It will be repaid by the state government, but upfront they give a sovereign guarantee that if the state government fails to repay that loan, then that loan will be repaid by the central government. So these are the sovereign loans. So this helps the state governments. Definitely, one part of the money also goes to the Government of India's own development needs. So these are loans taken for that purpose. One second important is that immediately we need a money. Say immediately we require a construction of a port or a development of city for the next 5 years. We say need $200 million. Now, where from this money comes? Immediately, Government of India may not have that money. So you take a borrow, you take a loan, and then over the years, over 20 years, 25 years, or whatever the loan terms, we repay it. So the burden on the initial burden is spread, and we get the infrastructure upfront. Next is that these funding facilities come at a very concessionary rates. The rate of interest are very low. If you go to the market borrowing rates will be much higher. So obviously there is a financial prudence to go for a concessionary loan, and which comes from the external agencies. And these are longer tenors. The tenors, as I said, it can be 20 years, 25 years, 30 years. It depends on how you are going to repay the loan. So overall, the borrowing costs come down of the Government of India because overseas borrowing cost is much less than the internal borrowing cost. And obviously it saves the economies, the economy-wide interest costs also. Now, if the funding had been from, as I said, funding from the domestic sources, it would have pushed up the Government of India's borrowing cost. And also, it happens that since this money comes and gets utilized in the economy, so suddenly a $2,200 million, say around 1,600 crores of Indian rupee, suddenly comes into the economy for next 5 years. So the economy gets must boosted. So these are the few reasons why these external funds are still accepted. Now, where from? What are the sources? Now, let's understand the specific sources. Now, the specific sources, we start with the multilateral agencies and the MDBs who are providing fund. First is the World Bank, and the World Bank is a group of 5-6 divisions or arms, you can say. But Government of India at this juncture are more focused on the two arms. One is the International Development Association, IDA. One thing, India became a member of the World Bank in 1945 and before independence, because though World Bank, it's not a founding member, but it became a member later on. Though in the 1943-44, there are a lot of efforts went in by the then Government of India to get a membership. So this history is there. Now, today, World Bank has got about 190 member countries. Now, one have to be a member of the institution to get loans. So it's important that India is a member. Now, the second is IBRD. IBRD gives loan at interest rates. Like IDA gives interest-free loans and grants, IBRD gives loans at a particular interest rate. So these are the two important arms of the World Bank. Next is the Asian Development Bank. Now, India is a founding member of the Asian Development Bank since 1966, and India is most probably the fourth largest shareholder of ADB after United States, China, Japan. Most probably India comes the fourth. Just cross-check. Now, ADB doesn't have these type of arms, so whatever loans, grants, etc., all comes from the Asian Development Bank. International Fund for Agricultural Development, IFAD. Now, India is also a founding member of IFAD in 1977, but the fund that comes from IFAD is more sector specific for agricultural development. But World Bank and ADB's funds come for various purposes. So when it comes for a specific purpose like IFAD, so only agricultural development are considered. Next is the European Investment Bank, EIB. Now, India doesn't have any membership with EIB, but it's a partner country with EIB. So since 1993, India had been partnering with EIB. EIB invests, India gives back the interest. With the loans and the interest. So EIB is one of the important where the European money or the European funds come. Next is the Asian Infrastructure Investment Bank. Now, Asian Infrastructure Investment Bank is a AIB. It's a new bank which has formed. India is also a founding member of 2014. Now, this Asian Infrastructure Investment Bank, headquartered in Beijing, now it's also multilateral development. Now, it is also growing along with the functions of World Bank and ADB. So now AIIB is investing in small or medium-sized projects, not very large projects, but they are investing also. Next, we have the New Development Bank. The NDB is actually the bank of the BRICS country. The BRIC is the Brazil, Russia, India, China, and South Africa. Now, India is also a founding member of the BRIC of the NDB, and in 2014-15, they become a member. And NDB has also started pooling funds and investing. Now, most probably the BRICS countries expand, then the NDB's membership will also increase. Then we have the bilateral agencies. Now, bilateral agencies are government to government. It's not a multi-level. Multilateral development means many countries put in their shares and their corpus. So like ADB has got about 67 or 68 members. World Bank, as I said, 190 members, AIIB. So multiple countries, when it comes, it becomes multilateral. But when it is a country to country specific, it becomes a bilateral agency. Now, where from India, Government of India gets bilateral funds? Government of Germany, France, Japan. Now, when Japan gives, it gives to the JICA. It's a specific arm of the government of Japan to fund projects. And JICA is a major provider of funds in India in mostly the transport sector. Many of the metros that are being constructed or being implemented in India are being provided by JICA. Then we have the government of Korea, then Russian Federation and the United States. When United States used to give the funds, it is through the USAID, but lately USAID is no more funding many projects. Few very important projects are there. And there is an other institution. Now, this is not any government. It's an institution which is recognized as a government institution overseas. It is the Organization for Economic Cooperation and Development, OECD. Now, OECD also provide funds through its Development Assistance Committee. But again, these are very small funds, not much or not big like, say, JICA or World Bank or ADB or IFAD or etc. So these are the agencies. Now, where does money go? Where Government of India uses this money? So Government of India has got specific focus. It doesn't use the money for payment of salaries. It's not that. The basic areas where it goes first is the energy. Now, energy sector is a very important sector in energy, and Government of India's focus is to provide clean energy to all. Therefore, a lot of ODA finances goes into the energy sector, like power plants and nuclear plants and etc. So we are not going to the details because these are separate webinars if someone wants to take it up, because this has got different contours, different layers of understanding. But basically, this is one of the things. So energy is one. Next is digital technology. A lot of money, a lot of funds goes to the ICT sector. Now, basic objective is to lift the people out of poverty, to provide clean access to the services, digital access to the services, digital access to the way things are being managed, public financial management, public total sector management. So digital technology is one of the area where Government of India pushes this fund. Next, the biggest one of the sector is the transport sector, where building transport infrastructure for low carbon, safe, accessible, affordable transport systems is very vital. All freight corridors are being covered under transport sector. Roads are being covered. NHAI is a major receiver of this fund. National Highways Authority of India, Road Ministry, Shipping Ministry. A lot of things happen in the ports, in the major ports, minor ports, airports. So railways is a major beneficiary of these funds. So transport sector is one of the happening sector, and definitely metro rail also comes under this sector wherever metro rails are going. Next very important sector is urban development. Now, this is basically the city development, and a lot of money has been going into the urban development. And here the objective of the Government of India is to have a safe, sustainable urban centers. We had a scheme of smart cities, then we had GenNURM, then etc. Now, in all these funds, also these ODAs come. These ODAs provide that funds. We will understand how ODA provide these funds, not for a specific project, but for the government's overall project. So we'll understand that. But urban development is one of the important sector where definitely I mean, basically, though we all stay in cities, we always aspire to be in the best city of the world. So a lot of happenings are going on. Next is the water. Now, water is definitely a crisis area because drinking water is not always freely available, but we waste water. We do everything with the water. We throw water. I mean, we drink half bottles of water when we purchase from the market and then keep it on the table. But water is a sector which needs conservation, which needs better services, management, etc. Because raw water or the source water is scarce, and we have a lot of climate change issues. Like in India this year we had a lot of rains after a lot of drought periods. So I mean, these water just flow out of the system and goes into the sea. So there are a lot of work is going on in this water sector under the ODA assistance. Next is agriculture and food security. Now, agriculture and food security also, once we have passed the Food Security Act, etc., this has become a very, very important sector. And most importantly, the climate change factors, the flooding, etc., drought has created this particular sector very, very vulnerable. And India requires a lot of technical knowledge from outside countries to manage the agricultural sector. And also we have our own knowledge, but definitely funds are required under this agriculture and food security. Next, we have the climate change. Now, it's, as we all know, it's an extreme situation of droughts and floods and flash floods, etc. Now, this creates lots of havoc, lots of infrastructure damage. Now, once we have to bring up to this next level, we require a lot of economic and social development. So, climate change is a big impact on the financing pattern of the external agencies. Next comes education. Education has been always a preferred sector because we all understood that that education is a pillar of our democratic success. So education sector, a lot of money goes, like the Sarva Shiksha Abhiyan, and all these schemes also get funding from the development partners. Now, environment is a vast subject. It's very difficult to speak on 2-3 sentences on environment. It's a sustainable growth area. Development agenda would be there, and everything that we are trying to do under the ODA assistance, we always try to link that environment is being saved, and there's a sustainable improvement on the environment. Financial sector also receives the ODA assistance, which basically supports the financial sectors, overall banking sector, etc. The capital market also gets a lot of funds for the development. Then the microfinance is there, small and medium-sized enterprises are there. So finance is also core finance where ODA money comes. ODA, any overseas development agency will be very, very much keen to see that whether gender and development is there. So gender biased policies are not allowed. It's only that where it is an inclusive gender policy where every man and woman gets a chance to work, specifically the vulnerable women and the girls. So here also basically a lot of money comes for the gender development where specific money goes for the women and girls development. Now, governance and public financial management or public management is a big scope where government puts in money to improve the governance factor, the government's structure or good governance, to where services can be given and a lot of reforms can be taken. So Government of India has reformed these systems over the years, and many of the funds actually may have come from this ODA assistance also. Health, as I said, it's a very, very important sector where construction of hospitals, provision of equipment, medicines, facilities, doorstep health services, where people don't have to run from the rural side to the cities to access health. So that is the primary objective. So now we have the primary health center. Now we have the National Urban Health Mission, National Rural Health Mission. Now please understand these schemes are also getting assistance from these ODAs. This may not be a particular project of the ODA, but they get a budget support or a policy support from the ODA agencies. Then we have the public-private partnership where Government of India is keen to bring the private sector also, because as we all understand, government doesn't have always the money, but public-private sectors can also come in. So public-private partnership. Now, Next important is a cross-border cooperation. Now, cross-border cooperation is gaining momentum nowadays because what the ODA, since suppose say if we take the example of the place where I'm sitting now in Bangladesh, I'm in Dhaka today. I mean, in Bangladesh, where I'm sitting, India, Nepal, Burma, these are all a region. We have a country border. Definitely, we have country borders. We have different governments, etc. But this is a region. For this regional development, few important things happened. One, Asian Development Bank financed the Asian Highway, which runs from Lahore through India's upper part, then to the entire Nepal, then it again crosses India, it enters Bangladesh, and then goes to Burma. Now, this is the Asian Highway 1. Now, this is a cross-border cooperation. There is another highway which connects Calcutta to China in Kunming. So it passes through India, then it goes to Bhutan, then it goes to China. So these type of cross-border cooperation, also one project which I was personally involved in was a regional connectivity project between India, Bangladesh and India to link the road from, Burma, Myanmar, India, Bangladesh, again India. That was a regional connectivity project to ferry goods and services. So that was another cross-border cooperation. So these are for the closer trade integration, interregional supply chains, and stronger financial links. So now this is no more a country specific. This becomes, so India part, India was managing, Bangladesh's part was Bangladesh managing, Burma's part, Burma was managing, but it's a regional project. Okay. Now, last and the most important are the two, the social development and poverty, because we are still in not in a very good situation the worldwide. We are having wars, we are having battles, we are having a loss of life. Poverty is coming back every day. It doesn't go, we are not able to mitigate poverty, though a lot of effort has been done. So government of India also think about inclusive development. So social development, poverty becomes a one of the another sector. And finally, the sustainable development goal, the 17 SDGs that we have, UN chartered sustainable development goals. So a lot of money goes into these sectors also. Now, some of the sectors are common, maybe, which I've already discussed, but some may not be common. So this is another area. So these are the areas where the ODA finances go. It comes from the agencies and it goes in this area by Government of India. Now, what are the institutions responsible for this entire management? Because this is not a small thing. It's not a loan taken from somewhere. It's an international affair. Now, two important departments, there may be more, but we are now concentrating on the two most important departments under the Ministry of Finance. Now, this Ministry of Finance has got about 6 departments, but out of that, 2 are very, very vital for these external aided projects or external funds, whatever you say. One is the Department of Economic Affairs. Now, it's one of the 6 departments, as I said. Now, DA has got many other roles, but I mean, like economy, advise on economic issues, internal, external aspects of the Indian economy, inflation, price control, foreign exchange management. It also involves in the official development assistance. So every official development assistance part or portfolio passes through the DEA. So DEA is one of the most important department, you can say, of the Government of India, is handling these external funds. Then preparation of budgets, I'm not going into that. Also the bilateral and multilateral engagement. I mean, it's not the assistance, but the engagement is also there with international and financial institutions and other countries, which includes many. We'll come to that later, how they're doing. Now, let's understand the structure of the DEA. Now, that is important because if you are trying to get into this sector, a little bit of knowledge that who is managing these funds is, I think it's important. So there are many divisions and sections of under DEA, but we are concentrating on a few. Let's see, who are they? Now, we are concentrating on the 5 divisions of the DEA. One, the aid accounts and audit division, the Asian Development Bank division, the Bilateral Cooperation and Sustainable Finance division, the Fund Bank division. Now, don't get confused with this particular nomenclature of the division. Fund Bank is actually the World Bank division. The entire World Bank things comes under this division, but it is named like that, Fund Bank division. And the other multilateral institutions division. So these are the 5 divisions which are there. Now let's understand what these 5 divisions are doing and what are the sections under some of these divisions. Now, aid, accounts, and audit division is a controller of the entire financial management. The money comes, recorded, the disbursement goes, recorded, the loans are repaid, recorded, the interest being paid and collected from the government or the state governments or whatever, they are recorded. So aid, accounts, and audit division, as the name suggests, aid is the aid coming, then the accounting happens, then the audit happens. Now this is everything related to the government of India when it is a borrower. So at the top level, it takes everything. It also is responsible for implementing the financial covenants. Now, please remember, when these loans and grants come, now nobody gives this as a free meal or as a free lunch. There are certain conditions attached. This has to be done, that has to be done, this reform has to be achieved. Revenues has to be generated. We have to charge or impose certain tariffs to collect the money, etc., etc. Now, these financial covenants basically means the terms and conditions. They have to be fulfilled by the state, by the receiver or the borrower or the beneficiary. This aid, accounts, and audit division, triple AD. I mean, we call it triple AD. So 3AD or triple AD, this basically looks into this and also servicing of loans, etc. Then the Asian Development Bank Division. The Asian Development Bank Division is responsible for all matters related to ADB. Now, all matters means how the loans come, how the proposals come, how they get prepared, how they get evaluated, how the money or the negotiations happen. So everything is for ADB related loans or ADB related grants. Everything is managed by the ADB division. And though they are also now handling the Inter-American Bank and the South Asian Regional Corporation, but mostly these are the Asian Development Bank division, because IAB is still very small. I mean, not that much. So for that, they don't have a separate division that has been included under the ADB division. So ADB division is one. And now all these divisions are headed by a director. There is a joint secretary, etc., etc., and then the section officers are there. Now, then comes the bilateral cooperation and sustainable finance division. Now, these are all related to the bilateral agencies or bilateral cooperation. We already discussed about who are the bilateral countries which get involved. So if a funds comes, requirement come from for JICA or from JICA, we have to go. So we have to go through this department, or sorry, through this division, where everything about the financial policy, dialogues, economic policies, etc., are considered in this division. So matters relating to the IDA and economic assistance, there's a scheme also going that is also being done by the department, but we are not concerned about that now. Then comes the fund bank division. The fund bank division, as I said, though don't get confused with the name, this handles the entire World Bank group activity. So World Bank has got a large exposure in India. So obviously World Bank fundings are also much bigger, I mean, in size. So World Bank Group is done through the Fund Bank division. Now, this division also handles IMF, International Monetary Fund. And because India is also a member of the IMF, so obviously these has got a bigger role. So Fund Bank division have all things to do with the World Bank. Now, there is another division, which is the other multilateral divisions or OMI divisions. Now, all other agencies, which all other basically the multilateral agencies, go under this division because their exposure is not that big. That's why for all there is one division. So this handles the NDB, IFED, AIIB, African Development Bank, EBRD, European Bank for Reconstruction Development, etc., etc. So these are the other multilateral institutions which also provide funds, and for this division is there. Now, let's very shortly understand which are the sections there, because ADB division may be one, but under that there's some specific sections. So if a particular project relates to some sectors, then we have to move in that. Now, ADB division has got two sectors or two sections, one ADB 1 and ADB 2. ADB 1 looks after the policy, urban and financial sector, and ADB 2 looks after the transport, energy and residual sector. So these are the two sectors, or the ADB 1 and ADB 2. So this we need to understand, because interaction, documentation, correspondence happens accordingly. So these are all related to understanding of the whole gamut of the external funding. Now, similarly, the fund bank division, the World Bank division, has got more sectors or more sections rather. It has got a state sector projects 1, because a lot of money comes under state sector projects 1. Then is a state sector project 2. I mean, there are certain portfolio allocated for 1 and 2. So that is not to be discussed here because otherwise the presentation will go for a whole day. Now, World Bank then also has central sector projects. And the next is the policy and residual sector. There is another section on IFC. IFC is International Finance Corporation. These and the MIGA, Multilateral Investment Guarantee Agency. These two are also World Bank's arm. As I said, we have only discussed about ID and IBRD, but IFC and MIGA are also part of the World Bank, but usually their exposures are less. That's why we have not discussed upfront on that detail. And then you have the IMF. So these are the fund bank division. Now, next we have the Department of Expenditure. Now, why Department of Expenditure is important? Because ultimately expenditure recording, expenditure accounting has to be done through the Department of Expenditure. Some approvals also comes from there. So DOE, why? Because all central government funds are also to be recorded there, and any matters connected with the state finances, they are also to be approved or to be noted at the DOE level. Now, there are many divisions under DOE, but the two relevant divisions are the Public Finance Central Division, which deals with all the central plan of the Government of India and with the appraisal and approval of public funded schemes for the central ministries. So all central ministries are looked after by the central division of the Public Finance Central Division of the DOE. And next is the state division. There is a state division also where all matters which connected to the state finances, additional central assistance, special assistance, ODA schemes, etc. are looked. So these are the two divisions of the DOE. So two departments important for under the Ministry of Finance. One is the Department of Economic Affairs and the Department of Expenditure. So DOE and DEA. So these are the two, and we have discussed about the divisions and the sections also. Now, just a snapshot. Now, this is just a snapshot was available as per 31st December 2024. I mean, we could not get a more current thing. So about 455 disbursing accounts are there, like ADB, AIB, UIB, France, GF, Germany. I'm not repeating, I'm not reading that. This is there. Now, these are all available in the websites also. And if you can look that how many schemes have been approved for 1/4/24 to 31st December 24. So there are around active number of active loans disbursing and disbursed is about 1,460. Disbursing loan is 401. Number of disbursing grants is 54. Fully repaid loans is about 30. Then we have the agency-wise breakup. So these information are always published by the Government of India to disseminate the information in the public domain. This is another presentation that where the agency-wise disbursing loans and grants. So you can see that that row number 11, Japan, is the maximum maximum number of loans have come from them, about 154. Then we have the ADB, about 56. Then IBRD and other things are there, like IBRD 69, IDA is 3. So totally 72 in for World Bank, 56 for ADB. AIB has got 21 now, EIB has got 6. So this is the 31st of December data. So this is there. Now, this is a progressive quarterly progress report for 2 years. Again, this is available over here, that how much assistance is going. If you look at the financial year 23-24, 10874,429 crores. So 1,08,744 crores has the progress report for disbursement. So disbursement here means how much released. Disbursement here means released. So almost a lakh crore of funds gets moved through the external aided projects, and this is a yearly figure only. Okay. Now, this is a sector wise. Now, it's not a very big picture. It may be difficult to view it, but these are the sector wise things. So it is water supply, sanitation, then resource management, energy, then non-conventional energy, environment, health, flood, etc., etc. Let's not go into the details because this is a pie chart available in the CAAA website. You can go to this website and can get it. So this is the way these funds are getting allocated, which I've already discussed in the upfront slides. Now let's understand the pattern of disbursement. Now, for pattern of disbursement, we have to keep some policies in mind, some principles in mind, not policies, rather principles in mind. Now, these are all external funds. Yes, Obviously, when it becomes external, we always pay a lot of respect. And these external funds comes with a lot of riders, lot of protocols, because we have to represent before the international community. So funds cannot be utilized like we use our own funds. It's absolutely a no. So all external funds has to be applied, utilized not only by the virtue of the Indian laws, but also the international laws. So a lot of respect, a lot of prudence, a lot of diligence is required in utilizing this money. Now, there are certain principles of procurement, because once this money comes, this money has to be utilized. And how you utilize that? By buying something or by doing something. Now, this buying and doing, obviously, we'll have to invite someone. Now, it doesn't never happen. All ministers are going and implementing projects, or all bureaucrats are going and implementing projects. For implementation of projects, they have to invite certain contractors, certain consultants, certain suppliers, etc., etc. So obviously, when you invite them, you procure these things. Therefore, the first principle that need to be considered is the procurement principles. Now, here I'm listing the procurement principles which ADB follows, but this is similar for ODA. Now, one thing I should tell you, I mean, during the presentation, I will be relying on any one institution to discuss, mostly with ADB, then with World Bank. Now, particular say these procurement principles, all agencies have their own procurement principles. Now, it's not possible to discuss all the things in one slide, or make a comparative analysis, because that's not the objective, to make a comparative analysis. What we are doing, or what I am trying to do, is that we discuss these things and try to see or check these particular points with the other ODLs also, what they are saying. But these points are important. So first is the procurement principles. Now, please note, those who will be accounting, if you are accounting for a transaction which do not pass the procurement test, it will be an ineligible expenditure, and that cannot be accounted in the project financial statements or project accounting. So please note the procurement principles first. Now, there are 6 procurement principles. 1, economy. All goods, whatever we are procuring, has to pass the economy test, like factors of price, quality, and any non-price attributes. So these factors have to be considered, whether we are purchasing a very high price thing or whether we are purchasing a low quality thing. So these need to be considered. The economy is important. Next is the efficiency factor. Now, whenever the procurements are done, it has to be make the project efficient. So procurement process has to consider the value and risks of the required outcome, the what for the project is there. Now, suppose if you're doing an education project, and suppose the funds are available, and instead of purchasing a school bus, we purchased a road roller. Now, that wouldn't be allowed. Now, one can easily purchase with the funds, but this will not pass the efficiency test. Any procurement should be fair. So it has to be there that all bidders are giving opportunity, or eligible bidders. Yeah, definitely. All bidders cannot participate in a particular bid. There are certain criteria set by the government of India and the agencies, but still then it cannot be that you restrict someone. That means you give a criteria where you are restricting someone. Now, ODA assistant procurement are very, very fair enough so that it doesn't disallow the eligible bidders. There should be equitable distribution of rights and obligations between borrowers and the providers of goods. That means the procuring authority, the procuring authority is definitely the borrowing authority, the government of India, state government or local government, etc., and the providers of goods, works, and services. Now, there should be an equitable distribution. It should be a win-win situation for both the stakeholders. It cannot be that the borrower is more benefited, the less benefited are the other side, or the vice versa. So it cannot be. And there should be a credible mechanism for addressing procurement related complaints. Now, but please note, if there is a complaint, then the whole thing goes for a toss. And if the project authority has made any expenditure on such a procurement, then it will not be allowed to be accounted in the project financial statements. It becomes an ineligible expenditure. So that's why I'm stressing on these points, because these are also important. The quality of procurement arrangements has to be there. I mean, the standard in a timely and effective manner. I mean, you have to ensure that the quality of the work, quality of the goods, quality of services are are kept intact. So the context, risks, value, and complexity of procurements are managed. So quality of the goods is very, very important. And the last two are the transparency. The entire procurement process must be transparent. There should be proper documentation. There should be publicly available. Now, again, I will say if this test is not passed, then the entire procurement will be cancelled and whatever expenditure has been done will be treated as an ineligible expenditures. And lastly, VFM, or the value for money, that whatever we are paying, whether we are getting benefits through effectiveness, efficiency, and economic use of resources, that has to be there. Because yes, a lot of money come, 200 million, 300 million dollars, 400 million at this rate, a lot of money to the Indian government, but this cannot be put into a waste. Now, what are EAP or an agency executing EAP does with this money? Now, the money has now come from the government of India. It has come from the disbursed from say from ADB or World Bank. It has come to government of India. Now either government of India's ministry will spend this money, or it will be again routed to the state governments. Now state government may again route it to the local governments or to some other agencies. So finally, the one which is executing or utilizing the money are called the executing agency, or they may be implementing also. They are called implementing agency. Now, there are certain differences between the executing agency and implementing agency, but let's not go into those details now because we don't have a time for all those things. But how these agencies, EAs and IAs utilize? One, they purchase goods. Now, these are all public goods. Now, these are never private goods. I mean, no EA can purchase a car for his own benefit or a house for his own benefit. These are all public goods. Now, these are all tangible goods procured under the EAP projects, which can be equipment, machinery, materials, computers, street poles, drain pipes. So any goods which is a complete good we are purchasing from someone whom we will now call a supplier. So goods are being provided by suppliers. Now, this is a word being used in all documents. So please, we have to go with these definitions only. And these are all the physical products for development purposes. So these are the goods, number one. Next is the civil works. Now, civil works are done by contractors. Now, for that, there'll be a contractor empanelment, contractor recruitment, etc. Now, here you can all understand the civil works will involve the construction installation of the projects like roads, schools, water systems, which are through the ADB loans or grants, and also any loans and grants. So, I mean, anything that requires a construction and implementation, dams, river, river irrigation, etc. Anything. So these are all under the civil works. And lastly is the consulting and non-consulting services. Now, for consulting and non-consulting services, we have the consultant service. So this is a third category. So basically, there are three categories: goods, works, and consulting. So goods, works, and consulting. Like for that, all borrowing agencies have prepared their procurement guidelines exactly in these three pillars: guidelines for goods, guidelines for works, guidelines for services or consultancy. Now, under consulting services, there are, under this, there can be two, like the consulting services. Consulting services include the professional and advisory services that provide expert or strategic advices like project management, engineering services, finance and accounting, training. Now, a lot of these things happen. I personally can say I have worked on all these consulting services for the last 25 years now. So this is a area where a lot of consulting happens and a lot of opportunities are there for the members also. That's another session which I take with the CPGFM to explain what are where the consulting opportunities are there for the members. So we can discuss it there. But these are the consulting services. So it's basically a knowledge service. Now, in case of non-consulting services, it's not exactly consulting, but certain things which goes into the consulting, like the logistics for training events or printing or media campaigns, equipment maintenance. So it's not a knowledge transfer. It's something to do with the skills or through some activities, security services. So these are the non-consulting services. Now, non-consulting doesn't only mean if there is no goods and works, it will be consulting. No. So there is a division now between consulting and non-consulting. Next is the incremental project administration cost. Now, this is also allowed by the funding agencies, where certain expenses to manage the project are also being provided as a loan, sometimes at a very nominal share or whatever. So incremental administration costs or incremental operating costs or project administration costs, whatever name it is called, it is for the project implementation support. Now, this is also being provided by the agencies under either a loan or a grant, etc., etc. But it does not include the salaries of the administrative unit. Now, administrative unit is definitely from the government side, but their salary is never included. But sometimes, and from my experience, I'm saying from sometimes, we have seen the contractual salaries payments are sometimes being paid out of this, but they are not government employees, they're contractual employees. So it depends on how the loan is being structured or how the agreement has been structured. Now, certain items cannot be funded by the ODA under the ODA. Now, this is a clear no. Now, here again, there are a lot of anomaly to understand, but one need to understand the basics of the non-funded part, and this non-funded part has to be funded under the counterpart funding. Now, these are all part of the project cost, but for this cost, this money cannot come from the under the OD assistance. It has to come from the counterpart funding. Now, what are they? Taxes and duties. Now, usually all additive taxes like the indirect taxes, import duties, value added tax, sales tax, whatever, levied on the goods and services and works are ineligible for financing. Though these particular taxes and duties, no ODA will accept to finance it. So taxes and duties are taken away before the claim for the from the ODA under the funds under the ODAs are claimed. Next is cost of land. ODAs will not pay anything for the cost of land. Land acquisition and payments for rights of ways are currently ineligible. But in some countries, these are being allowed now. Now, it is a policy level change that we are not going to discuss about that. But usually in India, it has been seen that cost of land goes under the counterpart funding portion. Cost of resettlement and rehabilitation, the replacement cost of lost assets. Now, what happens when a road is being constructed? Lot of houses or shops or shanties get removed. Now, these cannot be removed like that. Under the ADB, World Bank, and other agencies, they have to be rehabilitated. They have to be resettled before you can start the project, because with OD assistance, one cannot harm the livelihood and the lives of any people. That's a clear understanding. So whatever replacement cost and resettlement cost, I mean, it can be a housing, it can be, I mean, like I can give an example in one project where in working in Tamil Nadu, it was basically deep drenching of the 5 rivers on the river basin, the Kaveri basin. Now, obviously, there were a lot of shanties and things grew up along the river banks. Now they had to be removed. Now they may be encroaching, they were encroaching, but before the project started, houses for them had to be constructed and they were relocated there, and then only the project started moving. Now these resettlement and rehabilitation costs are usually not funded by the agencies, so they are taken. But again, some differences, some anomalies would be there. Again, that depends upon the particular project agreement. Sorry. Other expenses which are not included are that transport cost, local transport, insurance, late payment, food expenditure, resettlement assistance, interest during construction, visits of the officers to some meetings, etc., bank charges, other retroactive financing costs. Second-hand goods are totally no, leased assets are totally no. So these expenses are not found. Now, if these expenses are done by the project and included in the project accounting and the project financial statements, and if the auditor comes up, these will be treated as ineligible expenditures. Now, whenever there's an ineligible expenditure that obviously cannot be funded, they had to be borne by the under the counterpart. Now, ineligible doesn't mean it's a illegal expenses. Ineligible means that expenditure won't be funded by the ODA. So the counterpart funds or the counterpart governments can fund it, no problem. Now, counterpart funding. Now, this is an important thing in India. There is a 2011 DES circular, which clearly says if the project is a central sector project, then 50% of the project cost has to be funded by the government. So if the project cost is 100, then 50 will be contributed by Government of India and 50 will be contributed through the OD assistance. So 50% is a benchmark. Now it cannot be 50.001 also. It cannot be. For state sector projects, it is 30%. Now it's a clear 30%. So any state sector project, 70% will come from the government from the OD assistance, and 30% will have to come from the state government or the local government or any beneficiaries, whatever. So 30% cost has to be borne by the state government. Now, mind it, this counterpart contribution definitely will include the payment of taxes and duties, land acquisition, resettlement costs, etc. So all those costs will be a part of this 30%. It doesn't mean that 30% has to be given in money. It will also include those costs like financing charges and etc. etc. Now, these funds are meant to cover the administrative costs like the counterpart, because a lot of administrative costs will be there. So many people would be working, so many government officers would be working, so their salaries and etc. goes into the part of the counterpart funding. Now, also, once the project goes away or the project closes, there can be certain liabilities may come up. Say you have created a big plant where an energy requirement was there. So initially the energy requirement was part of the O&M cost, and say ADB or World Bank was financing. But once that O&M period ends, then the entire responsibility comes upon the government. So those recurring liabilities, no one can complain that you have to go and keep on paying those money. That cannot be done. So the exact contribution, it will vary between projects to projects and etc. etc. But responsibility of administrative cost and recurring liabilities would be there. And one more would be there. Now, this is becoming a pain in the EAP management in India now. After the project, when the project fails to complete within time, say the project period was 7 years, extended to 10 years, thereafter it could not complete, then all ODA agencies will leave, they will stop funding. But since these construction works were taken up, they remain incomplete, and there is a diktat, or there's a mandate from both Government of India and from the ODAs also, that they have to be completed before the project completion is announced. So they have to complete that with their own money. Now, for that, no money comes. It is absolutely out of the state budget or the internal budget of the organization, which is handling as the EA or IA. Now we come to a more process or procedural understanding how these projects get approved. Now here I'm going to restrict myself to the ADB's part. If anyone is doing for a World Bank thing also, please note that these are very similar. Maybe some nomenclatures would be different, but the process more or less remains similar. Now, what are the various stages of an ADB's project? Suppose ADB is financing a project. Now, basically, the project cycle of ADB, it starts with the country partnership strategy or the regional cooperation strategy. Now, first, they have a strategy that where they're going to invest the money. Suppose in India, or say the region or the Southeast Asia, etc. So they have a strategy document where they say that where we're going to have. Now, like say a few months back, I read somewhere the ADB is having almost a $2 billion focus for India for the next 2-3 years. So a lot of money. $2 billion is not a joke. Now, country partnership strategy or regional cooperation strategies are first, so that strategies get that is thought. Then based on that, the project preparation starts. Now, project preparation is not only the responsibility of ADB, it is also the responsibility of the borrower, that is say Government of India or the state government. So they also have a role in the preparation of the project. Then that project goes for an approval. First approval happens at the state government level, then the Government of India level, then it goes to the ADB level, where finally it gets approved. Then the agreements and all things are signed, and then the implementation starts. Now, implementation period definitely is a long period. As I said, it can extend from 3 years to 5 years, 7 years, but maximum 10 years is seen. No projects run beyond 10 years. So that's the implementation period, and where the goods, works, consulting will all come. They will produce the outputs, check the outcomes, and then the completion and evaluation happens. Now, ADB, World Bank, any international funding agencies doesn't stop only at implementation. Like in government projects, always sometimes happen, we stop at implementation, we don't look beyond that. But there is a process of completion and evaluation where the outputs and outcomes are measured with the designs, that whether the designs when it was done, whether it is compatible or comparable or not, or whether any problems had happened, whether any lessons to be learned. So these are the 5 steps. Now, a little bit I'm explaining all these steps, a little detail. So the country's partnership strategy, as I said, again, I'm talking about the ADB part only. So with each developing member country, or the DMC we call, so they have a strategy, like it has for India, it has for Pakistan, it has for Bangladesh, for Nepal, Sri Lanka, China, etc. So these DMC countries will have different policies, which will give a medium-term development strategy, and for the operational program called the country partnership strategy. So for every country, there's a partnership strategy which gets agreed with the respective governments, and then say, yes, we go ahead now with this strategy. Now, this strategy also says that we will invest more in energy, less in water, more in urban development, less in transport. So these are the strategy documents. Then based on that, the project identification and preparation. Now, sometimes ADB also identify projects, because ADB, World Bank also identify, because they all have a resident mission. They have an office in each of the countries. So they see what development can happen. So they take up a discussion, a dialogue with the respective governments, and they start. But anyhow, the state governments can also come up with requirement that we need a water supply. Like in West Bengal, one thing is going, like they are giving rural water supply now. ADBs for the first, most of the first time in West Bengal is giving a rural water supply, where 4 districts has been picked up, which are affected by salinity, by fluoride, by iron. So these are the areas, I mean, specific areas to give relief to the people. So that's the objective. It's not that I'm going to invest anywhere. So ADB conducts a study, which is usually called a PPTA, a preparatory technical assistance report, or technical assistance program assistance. In that, ADB's seniors and ADB's very experts come, they see the things, and then they talk with the government and identify feasible projects. Now, after that, our technical assistance report, as I say, PPTA report comes, then starts the due diligence. Now, due diligence is a big event in the proposal, in the preparation projects, where more experts come, and on specific areas like economic, financial, social, environment, safeguards, health, etc. See, all these are looked into. The due diligence factors happen, because if anyone misses, like suppose it is financially very viable project, but environmentally is going to harm the environment too much, then that project won't be taken up. So all has to be in a proper rank, and then only a project can pass. So in the project examination period, the project feasibility, the technical part is also seen. So whether that technically, engineering technical capability is there or not, or whether I'm harming many things, or whether I'm increasing the cost. So broad, I mean, again, these are all broad. Anyone can study this, go down, deep down into these things. These are all available in the documents of the official websites. Then the approval process starts. Now, approval starts with a loan negotiation. Now, loan negotiation happens with the borrower, say Government of India, and the say ADB or World Bank team. So they negotiate what are the terms and conditions, the financial covenants, etc., etc. Then it goes for the board approval. Now, board approval means the ADB's board or the World Bank's board. There's a board which sits on a regular basis. They take up the pending applications, and they study, and then they approve. May not approve also. Then after the board approval comes, then the loan signing happens. Now, loan signing will be between the ADB and the President of India, because these are all sovereign loan, but President of India cannot sign on all. So on behalf of the President of India, some officers sign. So it's always the President of India is borrowing the loan, and this is a rule for all states, all countries also. Okay, so loan signing happens. Then there's some other signatures also, which I'll explain in a later slide, and then the loan effectiveness happen. The loan effectiveness is a period, it is a period gap between the loan signing and loan effectiveness, usually 45 to 90 days. Now, what is loan effectiveness? Now, after loan signing, there are certain conditions, initial conditions that the borrower has to satisfy, like opening a project office, having some officers there, some putting some people there, doing some tendering process, etc., etc. Then only the loan effectiveness happens. Otherwise, the loan effectiveness gets delayed. Now, there are a lot of pros and cons into these things, but it cannot be again explained. One can study it. But loan effectiveness, loan takes effectiveness only when some conditions are met. Now, implementation, as I said, now implementation will happen by the EAs and the IAs. So they will have a schedule. Now, for implementation, one of the important documents that we need to check always is Project Administration Manual, or PAM, which ADB refers like that. And the same document World Bank calls is a project administration document. So one is PAM and one is PAD. Now, these two documents are the most, or this either one of the document is most important in the project, because the entire implementation schedule, plan, everything is given there. And this acts as a Bible. Nobody can alter that, because if anything has to change, then it has to go for another round of approval by all the processes that I discussed. Very, very important. Now, then the project consultants can be recruited. Sometimes individual consultants come, sometimes farm consultants come, sometimes government itself do the implementation. So whoever does. So usually in a big, large engineering project, you have to have an engineering team, you have to have a finance team, you have a managerial team, etc., etc. Then after the things are over, then the completion and evaluation, as I said, ADB prepares a project completion report. World Bank also prepares a project completion report, which usually is prepared between 12 to 24 months after the project ended, because they want to see whether the things have settled down or not, whether the pipelines are still functioning or not. So some time is given after the project end and when the PCR, or the project completion report, activity starts. Now, after the project completion report is given, it is thoroughly analyzed, it is published over the website. Then ADB also brings an independent evaluation department. It's called an IED. Now, this is within ADB, but it's an independent evaluation which do not consider any reports, whatever has happened. They do a fair round of evaluation upon themselves, and then there they try to find out what are the problems, because they assess by their effectiveness, past experience, how the development can happen, how the improvement can happen in the next future policy strategies program. So this is the role of the independent evaluation. Now, what is the government of India's role, or the state government's role to access the funds? Because this had been the ADB's part. Now, what government of India does? Now, a concept paper for the project is prepared. That's the first thing. Because what we're going to do, water supply, sanitation, solid waste management, transport. So a concept paper will be done, prepared by the concerned ministry, or the concerned state government, or the concerned local body, that we want to do this, and whether funds would be available under the ODA or not. So that concept paper is done. Then that is submitted to the DEA. For obviously, it doesn't go directly to the DEA, it goes to the line ministries, state governments, etc., etc. Now, nowadays, all project concept papers or proposed projects has to include a finance plus element. Now, finance plus element basically is that whether you're going to recover that money or not, because India cannot go on investing the money and government of India paying the interest without the interest coming back from the users. So that's the finance plus elements which has been included, and also confirm the minimum counterpart funding going to come. Now, nowadays, all central sector ministry and also state sector concept papers also go to Niti Aayog for its in principle approval. Once Niti Aayog gives the principal approval, then again the DEA takes up. Niti Aayog, since it's a think tank, they can come up with a lot of suggestions, a lot of engineering suggestions, etc., which have to be considered, which have to be rectified or modified, etc. Then only it can again move up. Now, in case of the, as I said, the proposal from the state government, it should come from the line ministry of the state government to the DEA. Also, the finance minister of the respective state government should give a clearance whether the debt service sustainability, whether the state's FRBM Act is not flouted. I mean, this is a very, very important requirement, because conditions has to be sent that the FRBM Act is not violated at any place. Then it goes to the screening committee, which is headed by a joint secretary of the concerned division of the DEA, which scrutinize the proposal before posting them to the to the ADB. Then the screening committee again goes through all these details. The a PPR is also prepared. A preliminary project proposal report is prepared along with the concept paper. Now there, the screening committee, once it is satisfied, yes, now it can move to the next level, then it goes. Now here then again comes to the ADB's part. Now ADB again takes up. Now this is more detailed approval of loan process. First is the concept clearance. Now ADB will not start that since screening committee has given the PPR, so we'll immediately start with the loan processing. No, ADB will itself carry out a preliminary fact finding whether everything is in order or not. Now ADB will also assess the development impact of the project. Now, sometimes it happens. Now, some state government might say that we want to create a satellite city or we want to create a football stadium. Now, I mean, though it's a government project, it can easily be funded, but what's the development impact? Now, that's an example I gave only, just don't take it otherwise, just an example. So these development impact has to be valued, and for that, the concept review paper goes for approval in the investment committee for them. So the investment committee of the ADB, they take the prima facie, the technical, the economic, social, and financially viable or not. Just they check it on, then yes, it can be moved to the next stage. Then whether ADB wants to come into the picture or not, because it may happen that it may not be an interest area or a core area of ADB. ADB might say, no, we are not going to invest in a tourism sector, or we are not going to invest in a sports sector. It can happen like that. So ADB will try to understand what is the overall role as a catalytic role that ADB is going to play in this project. So that's a thing. So, and also the country sector specific things will be done. Then if ADB is satisfied, then it goes, or the CRP is cleared by the IC, then ADB forms a due diligence team, as I said. Now this due diligence team, sometimes the ADB's own officers that does that. Sometimes consultants are hired for that. Sometimes other experts are arranged from some universities and all, and they do an overall economic, financial, commercial viability of the project. Social, environment viability are checked. Health safeguards factors are checked. So all these are prepared. Resettlement plan, etc., etc. All these are done. So whether it will be resettlement or not, whether trees would be felled or not, how many trees would be felled, how that should be recovered. So all these are checked. Whether rivers are going to be impacted or not, a lot of pollution impacts that will be there, climate change. So all these are checked in the due diligence part. Then the legal and regulatory framework. Now, then ADB prepares the term sheet. Now, term sheet is basically the due diligence, where ADB, after the due diligence, sits with the other side to negotiate the terms and conditions. That's why it's called a term sheet. The terms and conditions are negotiated, preliminary negotiation, that we're going to do this, we're going to do that, this will be the type of loan, etc., etc. And then finally, when the term sheet is prepared, it's a document with the ADB. It goes to the as a report called an RRP, or report and recommendation of the president. So the president is being given that report, which is now taken up for the board approval. So these are the steps where the ADB's part come. Now the board consideration happens after the president submits the thing to the board. Then the board usually takes a time of 21 days for a mandatory circulation, and then they endorse the project. Yes, it is done. Now, once the board approval comes, then ADB starts signing the document, and it is called a financial close. So ADB closed the thing. So now it goes for the next step of the implementation part. Now, when it comes to the implementation part, first thing is check that what type of loan we're going to looking at, because loan products are very, very important to understand, because all have different ideas, different theories, philosophy. So what type of loans are coming? One, it can be an investment lending model. That means we are investing, or ADB or World Bank is investing. For what? Pay for goods, works, and services. Now, this will have types of loan called project loan, sector loan, FIL, emergency assistance loan, MFF, etc., etc. So investment lending facility modalities is where the investment on a particular project is being done by ADB and World Bank. There is a policy-based lending also, PBL. Now, PBL means here the ADB and World Bank provides a fund to the general budget. Now here it's in the general budget they provide these funds, because the government was not getting funds for a particular sector, say education or health. So they put a fund over there, and then that fund is being spent and utilized by the under the government budget. So this is a policy based lending. So PBL is only when definitely there are certain conditions attached. Some policy reforms has to be done. Otherwise, this cannot come as a free lunch every time. Then is a result based lending. Now, result based lending is a change that is happening with both World Bank and ADB and other agencies. Is that you have to show result, then only we're going to fund it. So it has to bring some positive changes. So the modality supports the government owned programs. So there has to be results, say roads have been constructed, etc., etc. So the result based lending is also there. And there are some other modalities, including the project readiness financing, SEAF, PPP. I'm coming to the little detail of all these things a little later on. Now here, now the project loan. Now when it is a investment modality, this can be a project loan. Project loan means for a specific project it comes. Say a particular road being constructed. So for a road, a tangible output would be there, and for a particular 100-kilometer road, a loan comes. That is a project loan. A sector loan. Now I don't know which roads. I give the loan to the transport sector or to the road sector, something like that. And from that, there can be small sub projects, say 110-kilometer road, 120-kilometer road, like that it can happen. Now, what ADB does before a sector loan is given, say I'm giving you a loan of 200 million or whatever, but now you start giving me the smaller packages. Where are you going to spend it? Now for each, ADB is going to approve, and then it can go for the implementation. So it stays with the borrower to decide which of the projects I'm going to take up, because I have a corpus of loan. But project loan becomes specific to a particular project, and you cannot be utilized for any other roads. It has to be the 100-kilometer road. Then it can be financial intermediation loan, or FIL, where there are certain sub borrowers like financial intermediaries, banks, etc., financial institutions, where ADB through the government of India lends money, and they then on lend to others. So these are financial intermediation loans, which usually comes to the financial intermediaries like banks and the non-banking company, NBFCs. There is an emergency assistance loan also. Suddenly there's a disaster such as an earthquake, like it happened very lately at many places in Afghanistan or in Nepal and in tsunami, etc. Suddenly if that happened, now it is very difficult to process a loan with all these processes. It's a long process. It takes about more than a year to process all these things. So emergency assistance loan can be given where high priority physical assets are restored and the people's livelihoods are restored. There is another facility called multi-tranche financing facility. Now, if it's a large project, I mean, say it may take 15 years or 20 years to do the project, but but the loans cannot be for that long. So what ADB does, they break this loan into three parts. So the 3 loans will come or 4 loans will come. So that's a multi-tranche. That means each tranche is a loan. Each loan will have to be managed separately, but the total work may go beyond 10 years or 15 years or whatever. So it's a multi-tranche facility. So these are complex projects which require a longer investment and longer commitment, but usually not the usual 7 years or 5 years project. So this is another modality. Then the policy-based loan lending, as I said, the policy-based lending is nothing that it transfers the money to the general budget instead of paying for any explicit projects. Now it is up to the government to repay that loan, to utilize that loan. And obviously, government can have some flexibility in using that loan also, but other loans are become specific, and ADB and World Bank monitors them specifically. Then we have the sector development loan. Now, suppose there's an investment loan for, which is a requirement for a investment also and some policy reform also. So then the sector development programs come, where the sector development loans come, where there's a policy reform also and also the investment requirement. Result-based lending, as I said, it is up to the thing that when direct project expenditures will happen, and you have to show the results where these are going. So it will have it will be based on the country's system for financial management, procurement, safeguards, etc. Project readiness financing. This is a new tool introduced by ADB very lately, last 6-7 years. Now, if ADB is going to a new agency who have never implemented ADB projects or World Bank projects, they have no idea that how these projects are happening, but they have a requirement. So they start with a very small loan, say 10 million, 11 million, 5 million, whatever. And there they build the capacity and also prepare the documents of the project. And that helps them to go ahead. Now, SEAF Small expenditure financing facilities are also there. Total estimated value of the contract will be 15 million. And the technical assistance. Now, technical assistance is usually not a loan, but it comes for execution of certain ideas, strategies, studies, etc., etc. Now, repayment. How does Government of India repay? Now, usually, I'm referring to the ADB's part. Now, repayment terms usually under sovereign project loan is for 20 years, including plus a grace period of 5 years. Or sometimes if it's a program loan, then it is a 15 years, including a grace period of 3 years. So sector project loan will be 25 years, including now grace period doesn't mean that you don't have to pay the interest. There is no interest holiday. There is a principal repayment holiday for 5 years. Now that obviously then goes to the 20 years, but for the first 5 years, the interest has to be repaid. So there is no interest payment holiday. There's nothing, but there's a principal repayment holiday for the 5 years. Now, then these payments can be either commitment linked repayments, where ADB and the Government of India or the borrower sits and decide how this principal will be repaid. It can be annuity type repayment. It can be straight line repayment. That means same amounts come. It can be bullet repayment. I will tell how much I will repay, or it can be a custom tailored repayment also. Now that has been started very lately in some projects in ADB. Now custom tailored repayment, where they decide when I'm going to repay what. So these are the repayment strategy, or it can be disbursement length repayment. Disbursement length repayments means that when the disbursement happens in a specific period, actual disbursements happen, and then based on that, they have an amortization schedule where the payments are done in a semi-annual period or whatever. So basically, I'm giving you the ideas. Please go through these things in detail, because otherwise, this cannot be explained everything in there, but these are all linked, because until as you know these things, accounting won't happen properly. Now, what is the interest rate? Now, interest rate is also an important factor to understand. Usually, it was LIBOR, London Interbank Offered Rate, which started from July 2001. But lately, from 2017, there has been some change in the international financial sector, where the LIBOR is no more a preferred way to take the interest rate. So LIBOR has been switched off, you can say, or it is being taken away. So LIBOR is no more used for the new loans. Now it has come to secured overnight financing rate, or SOFR. It is the more acceptable overnight financing rate. Now these interest rates are published on a periodic basis on their websites, and these rates of interest are taken. Now, this is the basic rate. This is a basic interest rate. Okay. Now, there is also another two called Euro short-term rate, ESTR, which is usually not followed in India. I have not at least seen ESTR being followed. And there is Tokyo overnight average rate of toner. Now, when Japanese yen are being taken as a currency for this loan, then toner becomes the interest what we call interest factor. So it is again published by the Bank of Japan on a regular basis. So these are the four interest types, or interest what we call terms, but most preferable now is the SOFR. Now, other financial terms we'll have to consider, because that is an important factor. Commitment charges will be there. It's levied on a flat rate of 0.15% on disbursed loan. Now, this is a huge, if the agency is not repaying the loan or not utilizing the loan, the commitment charges has to come. Then the maturity premium would be there. Maturity premium also has got a slab, 10 basis points for loans greater than 13 and 16. Please go through this. So these two are added to the loan. So if the loan is 5%, you add 0.15%, and then you add a 0.1 or 0.2 or whatever. So these are the maturity premium and commitment charges added to the loan rate. Now, this is a loan agreement I've picked up from a project which I had the access to. So this is a loan agreement would be there. As you can see, the loan has been signed between India and Asian Development Bank. So India is being represented by Government of India or the President of India. So loan agreement is always between India and ADB or the funding agency, and it is the borrower of the loan with a sovereign guarantee that if the state government or anything fails, we will pay it. So this is one document. Also, other than the PAM and PAD, must be read by the accountant. It's very, very important. All clauses, all factors for expenditure are given in the loan agreement. There is another document called project agreement, which is a loan specific project agreement. Now, this is signed between the ADB and the executing agency, say Government of Tamil Nadu. The picture shows it is signed by the state of West Bengal and Kolkata Municipal Corporation. So project agreement will also have the detailed about everything. Now, project agreement signing and the loan agreement signing date are usually same, and project agreement are signed between the representatives of ADB and the government of Tamil Nadu or whoever the next borrower is. So these two documents are very, very important. Now comes to the expenditure part. Now, expenditure, you can say these funds which now have been received or have now been allocated, not received, have been allocated for the expenditure, because fund doesn't come in one shot. Don't assume that 200 million will be given and any government will be putting it in the bank and they will be enjoying the interest. No, it doesn't happen. Not a single penny flows. Now, how it happens? Suppose, I mean, just we take an example of one loan. The loan number is given. So one can say this is a loan from Calcutta. It's a very initial loan. It was signed in 2002, long back, almost 25, 24 years back now. This loan is successfully completed. But what are the expenditure components? The expenditure components had been very specific. It will be spent on stakeholder consultation process. It will be spent on sewerage and drainage, solid waste management, slum improvement, canal improvement and implementation assistance, and capacity building. So these are the expenditure components. So whatever loan came, so here you can see it was 162.71 million. There was another loan of 79, around 240 million loan came. Now out of 240 million, the project was for $365 million. So remaining 365 minus 240 was put in by the counterpart, state government and the local bodies. Now, this money was spent for these. So expenditure, you have to understand what are the expenditure heads. Now, expenditure, we all know, this is just receiving something and paying the money. So expenditure will be in the specific, and this is not common for any project. These are all different in different projects. Now, these are the expenditure. So here we are putting in pipelines, we are putting in drainage systems, we are putting in water supply systems. So these are the expenditures happening, and this has to be accounted for. So how do we account for that? Simple. If you are paying if you are getting an asset, we record asset account debit to creditor, supplier or creditor, and when we pay creditor to bank. Then done. So this is the accounting, but you have to know what are the areas where it is being going. Now, this is a cost estimate usually prepared. Now, I mean, this is a breakup. Say 285 million is a project cost. Again, one project is already there. So 285 million. Now, here the two basic outputs: climate and disaster resilient urban services and enabling environment for sustainable. So these are the basic outputs. Now, how are we going to achieve these outputs? By procuring goods, works, and consulting services. So these outputs can be achieved through those procurement of goods, works, and services. There will be a contingency also, because price and physical contingencies can happen. There is a financing. So total is 285. Now, if you look at 285, now how it is shared, ADB will give 70% as per the DEA circular. State loans will be restricted to 30% of counterpart. So 30% means 85. Now this will not change an inch. This is a thing embedded in the rock. This cannot change. So 285 is being shared 70-30 between ADB and the government. Right? Government means ADB is not bothered whether it is a state government or local government or central government. It says that government will provide that. Now, this is the way those two outputs which I've shown. How are we going to do that? You're going to procure civil works and equipment. You're going to do consulting services. You're going to have some capacity development. You're going to have some incremental admin charges, and these have all discussed in over there, because all these will have already, because capacity development is non-consulting, consulting is consulting, incremental admin charges is there, and civil works and equipment, both works and goods are clubbed together over here. And there is an unallocated also, because when the loan is being processed, say 7 years ago or 10 years ago, one cannot understand what's going to happen in the next 6 years or 7 years. Another COVID can strike, anything can happen. So obviously, now here you see, it is ADB is financing 100% of total expenditure. Whatever claims come, they will pay 100%. But look at the footnote. ADB, this 100% expenditure will exclude taxes and duties. So no additive taxes will be funded by the ODA. Now, this is the payment thing. Now here, this is an old model. This model is no more followed now, but I have kept this just for the understanding and explanation. Here you see the ADB gives the money, one arrow, one black arrow is going to Government of India, and another black arrow is coming to suppliers and contractors in case of direct payments. That means ADB now or World Bank can also pay that directly to the contractors and suppliers without routing it through the Government of India. Now, this was the practice earlier. Now, from 2016 or 17, maybe, this has been stopped. This is no more there. I'm going to show you another thing. Now, so this Government of India, who is looking after that CAAA will be there, Control of Aid Accounts and Audit, and Department of Expenditure, Plan and Finance Division. So this already I've discussed earlier. Then the money is coming to Government of West Bengal. Government of India is borrowing the money under a loan agreement. And then Government of West Bengal is giving to Kolkata Corporation. There is another on lending. That means Government of West Bengal is also lending it to Kolkata Corporation. So the final beneficiary of the loan is Kolkata Corporation, and they will record that over here. So how the payments will move out? The payments will move out to project management consultants, design supervision consultants, suppliers and contractors. So consultants, suppliers and contractors. Now, if the money is routed through the government, then there's a dotted line you can see, which is coming that ADB is giving the money, which is getting routed under reimbursement. Now, I'm coming to that, but reimbursement means first the government has to pay. That means KMC has to pay, then only the money can be accessed or claimed from the ADB. Otherwise, this cannot be claimed. But also, it was the practice earlier that the money could have been claimed directly under a direct payment. Now, this is the new method. Now, here you see ADB's money is not coming to the contractors and suppliers. It is all getting through Government of India. Government of India totally stopped this direct payment policy. There's no direct payment allowed. Now, everything has to routed through Government of India, because why Government of India ensured that there must be a commitment of the state government and the local government in paying or for utilizing the money. If ADB used to directly pay the thing, Government of India had no control over that. So now it has a control. Now everything is checked, reports are checked, feasibility reports are done, then only it is done. So this is the fund flow arrangement where the money comes to the PMU where we're going to do the accounting. So this is the final where the accounts rests. Now, reimbursement, as I said, the expenditure modalities, there are 4 modalities. Reimbursement, where the bank will reimburse the expenditure only when it has been paid by the borrower or the beneficiary. So bank, ADB or World Bank will only reimburse that amount, and this will be only eligible expenditure. It can be through an advance account also, where some money is given, where the EA and the IA keeps on paying them. And then when the advance shrinks, then they ask for the more advance. So again, for those claims for the re-advances or reimbursement of the advance or refilling in the advances, so they have to submit all documents. Direct payment, bank used to make the direct payment to the contractors and suppliers. As I said, this has stopped. And there is a special commitment where certain third-party payments for eligible expenditures under special commitments can be paid by the bank directly at the borrower's request. So these are the 4 methods. Now, special commitment is the term used in World Bank. In ADB, it's something different. I can't remember exactly now, but something. But the 4 methods are same for almost all the funding agencies. Now, these are the type of expenditures: conservation and development of rural transport, rural research. This is from a particular project in Uttaranchal, tourism project, provision of solar facilities, development of traditional medicine and yoga centers. So these are the core civil works for which the contractors have been allotted, they have been tendered, and now they're being paid. So these are the expenditure that has to be recorded. So funds received is one accounting and expenditure is another accounting. Now, you all know debits and credits. I need not have to say what entry you should pass for expenditure. So funds coming from one side, that is a disbursement from the banks, that comes as a receipt, and this comes as a payment. Consultation service, design super consultants, marketing training service. So these are the components of expenditure. Now comes to the final thing. I mean, please don't misunderstand that I'm taking up the accounting part at last, but I understand myself like that. The accounting is just a debit and credit, which all accountants know. But what we are going to account for, that's more important to understand. If we understand that, then debit and credit is not an issue. Now, at the borrower level, GOI level, Government of India does the accounting. Now, this is not our subject today. Government of India does everything on a cash basis because Government of India does not follow accrual basis. So whatever money comes, agency wise, currency wise, these are all recorded. And now one can go to the CAAA site and find out that what are the types of loans coming. Now, this is a particular of the World Bank, IBRD. So this has come receipts in local currency, receipts in INR, etc., etc. So this is the way it is being shown. This is accounting at the borrower level. Now, again, we are not concerned about this now, but I'm just showing that this is the exact accounting that happens at the aid accounts and audit division, where they keep details of every money that is coming in and every money that is going out. So this is the ADB's USD currency. ADB gives in Japanese yen also, it may give in euro also, but usually these tables are prepared on a currency basis. Now comes accounting at the entity level. Now, there is two concepts. One is the entity concept and is a project concept. Now, let's take the example, a very easy example for me to take. Let's take the example of Kolkata Municipal Corporation. Kolkata Municipal Corporation is an entity. Now, it has a project division or a project arm. That is a project. So Kolkata Corporation will prepare its own entity-wide financial statements. It has got its own entity-wide accounting process. So they will be accounting over there. The project will also have to do an accounting. So there are two accounting at this KMC level. One is the entity level and one is the project level. Now, why I have took up the example of KMC is that's to explain you what is the difference between entity and project. But in all projects, you may not find an entity because that's the only project they're doing. Like say Government of India's Public Health Engineering Department. Now, Public Health Engineering Department is not preparing any financial statement, but they're accounting. But for the project they're executing, they're preparing a project financial statement. So for PHED, for Public Health Engineering Department, you don't have a balance sheet. But in case of Kolkata Municipal Corporation, you have a balance sheet. So if there is an entity, when applicable, entity-wide accounting will involve tracking project finances within the borrowers and implementers agencies' overall accounting system, that whether they are taking responsibility of this loan or not, whether they are showing it as a loan or not, whether they are showing it as a receipts or not, because project is getting the money only when the entity passes that. So projects are subject to the financial management system, separate, still done, internal controls outlined in the PAM, PAD, whatever, etc., etc. Now, while projects may use a specific accounting method, now projects usually use a double entry method. It can be a cash-based method. It can be a single entry method also, but the entity can have a different method. Like Government of India always, state governments always follow the cash-based single entry method as per the government accounting rules of 1990. But for the project, they may have a different type of accounting, which can be double entry, it can be single entry, it can be cash based, it can be accrual based, whatever. But in India, we are not still following IPSAS. IPSAS is International Public Sector Accounting Standards, though a lot of efforts are going to bring a synergy between IPSAS and the accounting done at the public sector level. So a lot of work is going on that, but still we are fully following the basic GAR 1990, and for the local bodies, we are following the National Municipal Accounting Manual. Projects are following their own methods. So entity-wide annual financial statements also have to be submitted to the agencies who have provided the loan. They want to see whether the fund flows are recorded, whether the assets and liabilities are recorded, etc., etc. Now, accounting at the project level, that is more of the concern. Now, it depends on the depends on the ODA agency, whether it's a World Bank or it's a ADB. They have their own method, and these accounting principles or philosophies are all given in the PAM and the PAD. Now, they are all different, so there is no common between every PAM and PADs, but there is a commonness there. So project accounting for World Bank projects, they say whoever is the borrower, final borrower, they must generate timely and reliable information as required by World Bank. So they don't say you follow this method or that method. They don't say, only say you should have a generate timely and reliable information. So accounting there will be for all project expenditures, which I've already discussed what are project expenditures, and ensuring that the loan proceeds are used for economically for the intended purpose. So this is important because this is a criteria which every agency will see whether the money has been utilized for the purpose or not. Now, project specific accounting. Now, if there are multiple projects going in the entity, then it has to be project specific. That means loan specific. It is all projects are separately maintained. Project accounting also becomes specific. project accounting will also depend on the banks that we are maintaining separate. They ensure that there are separate banks for each project. If you have multiple projects and you have multiple bank accounts, one funds cannot go into another bank account. Now that becomes a botheration if it happens. But if somebody is managing multiple projects in one entity, they must ensure that the banks are kept separate, so there are no transfer of funds unauthorized or mistake also no funds are paid out of anything. Now financial reporting, as the World Bank requires, there should be a financial report relevant to the project's lending operations, and which will be reviewed by the World Bank. Audit definitely will happen. Now audit will be taken up by Chaudhary Shumon later on. So audit compliance will also be to begin. So this has to go to the World Bank. Now, international standards, like World Bank says, yes, since it's a World Bank, they say standards must follow the IPSAS. But in India, we are loosely following IPSAS, but not saying anywhere we are following IPSAS. Okay, so this is the requirement of World Bank. Now, in case of ADB projects, it's slightly different, but not very different. It's that the project accounting, I mean, there's a project banking, actually, I missed the term. The project banking will involve, project accounting will involve the financial management and etc. The PAM definitely outlines everything in details. And the project specific requirements again will be there. The PAM will say what accounting to be done, how to be maintained, what to be done. So again, one need to understand the PAM very much, the PAD very much, to understand what type of accounting. Accounting again is a debit and credit of expenditure and debit and credit of the funds, etc. Nothing else. Reconciliation of banks, reconciliation of advances, recognition of liabilities. So you all know. Now, reporting and auditing, the proper project financial statement must be prepared in accordance with the generally accepted accounting principles by an independent certified public accountant. So that's the auditing part. Now, nowadays in ADB project, these are the forms, or you can say these are the statements that is usually accepted for presentation. One is the statement of receipts and payments, because ADB still follows or still believes that everybody is a cash-based accounting, because in most of the governments, state government and central government, it is cash-based. But the problem starts when this loan comes to local bodies like Kolkata Corporation or anyone, where they have adopted the actual accounting. Now, in actual accounting is adopted for project, also they will adopt the actual accounting, and then this becomes a little bit of a cross, where a proper massaging is required to bring that what should we be preparing. So some agencies have decided that, okay, I'll be preparing on a cash basis also, simultaneously we'll be preparing on an actual basis also. So two sets of accounts are being getting prepared. But usually this is a cash based objective, though ADB and World Bank and DE and CNAG are looking into different things. In fact, our institute is also playing a role to bring up certain guidelines on that. So on this EAP accounting and auditing, but this is an area where need to be looked into, where agency is managing a project, but they are supposed to maintain actual accounting instead of cash based accounting. So statement of disbursement, details of disbursement, reconciliation statement, all advances, all banks, all reconciliation statement has to be given. Then there's a chart of account mapping table, status of past external internal audit observations, status of the financial management action plan, because the PAM gives a financial management action plan that what to be done and what not to be done. And then the status of the FM related actions during ADB review missions, because ADB review missions, World Bank review missions happen once in a 6 months. Once in a 6 months also the tripartite meetings happen, the portfolio meeting, tripartite portfolio meeting between the government of India, between the state governments and the borrowing and the funding agency. So that's also happened. So these are the ways the projects are being overseen also. Now, one thing everybody must note, now in 2013, DEA brought up a document, or brought up a circular, where it said that all ADB World Bank projects must follow the guidelines given in that, and in that certain type of statements were given. But now I'm not very sure that requirement is no more a mandatory requirement now. So somebody can follow it, but it may not follow it also. But that was a document. Again, this document is available in the website. One can easily see the DEA assisted projects, whatever statements to be provided. Okay. Now, recommended, as I said, the financial reporting templates has been given, and so we recommend. But project accounting for ADB projects usually requires the following to be part of the project financial statements. Okay, so chart of accounts for the project management unit shall issue a use a specific chart of accounts. This is important. There has to be a separate project bank account. Now, this chart of accounts PMU can define, but in some cases, like where the PMU is a department of the government of India and the central government of India and state government, they don't have a separate chart of account. The chart of accounts accepted under the budgetary system, under the integrated financial management system, IFMS system, is the budget chart of account. But there can be some specific project related which can be linked to those heads. But in case of a local body, they're free to decide upon the chart of accounts, the heads of accounts, the codification, etc. Now, there will be separate project bank account, as I said, loan wise in case multiple loans are being implemented. Now, as I said, some projects are, there's already requirement to follow that template. So they are following, but basically the basis of project accounting, which is not strictly IPSAS, because IPSAS has very strict guidance note on government project accounting. This can be cash basis, it can be accrual basis, it can be hybrid basis also. Though hybrid basis, World Bank sometimes accept, but ADB usually does not accept a hybrid basis. It is a going concern, though project stays for 3 years, 5 years, but still we consider it as a going concern under the going concern concept, and there has to be a consistency. Now, accounting systems, single entry, as I already said, governments follow government accounting rules, GR 1990, which clearly said that central government and state government cannot adopt actual accounting. So it's a single entry, and double entry wherever whoever has approved or adopted, like the municipalities, etc., they can adopt the double entry. Now, sorry, this is a repetition of the slide. Sorry, I'm going up. Sorry. This is one example of an accounting. I'm just showing that how accounting is done. This is in an ADB project where they were maintaining a tally accounting system. Again, just expenditure. This is expenditure, payment out of the government of Tamil Nadu Treasury. So these are the expenditures happened. Now done. So payment, your journal is, these are the basically payments, direct payments are being routed because they are not following actual accounting. So obviously the payment entry is there and there are no actual journal entry. So this is maintained under tally. So this is a payment entry, and this is one of the receipt entry where for a particular receipt, ADB is giving a loan and also the government of Tamil Nadu's contribution is coming to the government treasury, and that becomes the receipt part. So this is the receipt part. So these are the basic two accounting entries we need to do. One is a loan receipt and one is the expenditures made, but expenditure entries will be more. Now, this is a sample financial statements. I'm not going into the audit statement. Now, this is a sample of an ADB project, which is audited by a chartered accountant, by a private auditor. So here you can see it starts with the receipts and payments. Simple. Receipts and payments, what are the opening balances, receipts, investments, since they have to maintain this under cash basis. So they are maintaining this under the cash basis. Now, this is the expenditure on payment basis. So where you have made the payment, more detailed, the investment cost, work, civil works, consulting, etc., etc. Then there's a total project cost, which is checked both on a cumulative basis and also on a year-to-year basis. And this is a statement of disbursement. I just lifted 4 or 5 annexures from the list that is usually given. So these are all standardized now. I mean, all projects are maintaining this. The audit is being done by different things. Now, this is a sample of a World Bank project, which is audited by CNAG. So CNAG definitely will have a different way of audit report. Again, I'm not going to take up the audit report, which Suman will take up. Now, this is again the same financial statement that is being presented. So the head of accounts are there and the cash disbursements are the same annexures. There's no change. Annexure 1, 2, which has been agreed by the DA. But now, as I understand, there are some changes happening, some modifications are happening. I exactly don't know whether all projects will be preparing same types of financial statements or they have their own leeway to or go for anything what they feel better. So this is a changeover happening, which I'm not very sure of that how the presentation will happen. Maybe you can understand it. So with that, I come to an end. I have slightly overshoot my time because as I said, this is the first time I'm making the presentation. So I have to cut down this presentation to some parts in the letter hub. Thank you, sir.
Thank you, Smita. So is Arun Gupta ji here? Yeah.
I'm here, sir.
Yeah. So we should start with the next part of the next issue.
Sure, sir.
Okay. Okay.
And thank you very much, Somitaba sir, for the presentation.
Yeah. Yeah, so I think my screen is visible. I have shared my presentation.
Yes, it is visible, sir.
It is there.
Yes, yes.
Thank you. Thank you, Mr. Arunji, for giving me the platform for saying a few words about the audit of the external agencies. So, and also thanks to the chairman of the committee and the committee members and the staffs of this committee, which has chosen me to have this seminar on the this external auditing part of the ADB banks and the world banks. So auditing is a niche area of ours. So I don't think so many things are to be discussed on how to do the audit. But as Umitaoda has clearly stated that there are certain things which are new regarding the accounting for uh, these agencies, whether for the World Bank or for the uh, Asian Development Banks. So for the audits of EAPs, there is you can see the responsibilities of the borrowers and the auditors. This is first of all what is our responsibilities. So activity-wise preparation of PFS and management representation letter is on the borrower. But many of the times we as a auditor also take a part as a PMU. So when we are having a role as a PMU or a consultant, so many of the times it is the responsibility of the borrower who has been on care of us as a chartered accountant being in consultant. So this project financial statement also becomes our part of work. So it is not as a auditor. There are dual role of ACS in these types of auditing agencies. This once you can be a consultant to the World Bank or Asian Development Banks as a member of the PMUs or as a individual consultant, which the implementing agencies appoint you. So if you are appointed as a project management unit, then this PFS and management representation letter is your part. And if you are been appointed as an auditor, it is not your part. Then independent audit of the PFS is project financial statement depends upon the auditor. It is individually the auditor's part. And assurance of audit opinion, PFS compliance and the management letter is also is a part and parcel of the auditor's responsibility. Submission of APS, auditor's opinion and management letter to external funding agencies is of the borrower or the PMUs. And also the calculation of project financing is a part of the borrower. And preparation of the auditor's TOR is the depending on the borrower, and agreement on the timeline excluding submission timing of external filing agencies is on the auditors. So there may be two roles which I have already explained as a chartered accountant in practice. So one part is the borrower part and one part is the auditor part. So majorly we can take up two of the options of her. So Amitav has taken up the reporting requirements already. So I'll take at first the external audit part. So an external audit is an independent objective examination of the organization's financial statement and operation conducted by a qualified third party. The primary objective of external audit is to ensure accuracy, reliability, and fairness of financial reporting, while also evaluating the organization's compliance and applicable laws, regulations, and accounting standards. So, as Amitabh says, that all banks many of the times record IPSAS, but we are following the auditing standard recommended by our institute. So, on the basis of the accounting standard and auditing standard, we prepare our audit report, and this we are also doing the audit on based on these auditing standards and accounting standards. To evaluate the external work, the extra work as an auditor we have to do in many of the statutory audit, we only audit the financial part. But as a auditor of the external audit of these funding agencies, additional responsibility comes to us as not only to evaluate the financial statement, but also to look at the reporting mechanism and also the legal and the compliance part. Whether, as Mumtaz has already told, that compliance expenditure or tax burden is on the implementing agencies, not the funding agencies. But that also you have to report if any expenditure which has been in the nature of compliance or taxation, which has been booked in the funding agency's expenditure, which as a external auditor we also identified, and we have to say it in the audit report. See whether there are applicable laws compliant, as Amitoda has already explained, how there are responsibility on the funding agencies, one part, and one part is of the implementing agencies. Like if the central government is taking some fund from the World Bank or ADBs, there is a minimum requirement of 50% by the central government. So these are the expenditure which can, like the paying of taxes, the salary burden of the already employed IS officers, WBCS, or any other officers which have been included in the project. So this part may not be the compulsory 50% or 30% for the state government. This part is not always on the cash part. This can be on your contribution towards this. If any project requires any land or any such a release of land, or any such of fixed asset which has to be incorporated in the project that has already been built by the state government or the central or the urban local bodies, that part forms part of your contribution as a 30% for the state, or if it is coming from the central government, it is a 50% in the stake of the central government. So external agencies are categorized by the independence in IDSS. This is same as any of the auditors do, and such as international standard is expected by them. So institute is working on that. How they are also formulating this standard, which will be as good as the international accounting standard. And during the process, external auditors review financial records, evaluate internal control, and conduct sustainable testing or verify the accuracy of transaction and balances. And this is this is an additional work. That's the conduct sustainable testing of verify the accuracy of the transactions and balances. Many of us doing the statutory auditor does not do any field work or does not go for the verifications of the asset, verification of the asset in real sense. Say if they are building any road, they're building any drains, that also we have to, as the auditor of that, we have to give our assurance that we have conducted such testing to verify the accuracy of the transaction and the balances. The accuracy wherever the financial statement provides a true and fair view of the organization's financial position and platform. That means as an auditor, we have to give our report on the true and fair viewness of the project report which has been formed. And now you know that the UDIN has been a part of it. So you have to create an UDIN for any of this true and fair certificate as an external auditor you are signing and giving. So this is has to be taken up as an audit. So institute has not yet categorized in the UDIN side anything related to directly attributable to the audit of the external funding agencies. I think what is going on, they may include, on if it is not included, go through the others and put it as a audit and assurance services, and in the narration or that you entirely declare that what is the type of work you have audited. And the findings of the audit are presented in the audit report, which may include an unqualified opinion if the statement is accurate, a qualified opinion if it is a minor issues, and adverse report if there are significant misstatement or irregularities. See, there are other types of audits by the World Bank and by the ADB banks which are going parallel or going in other NGOs are doing things. So at the time of doing audit of the statement, why it is saying that it is audit of the statement? As Amitabha has rightly told, and he has shown you that only receipt and payments account are requirement, and this is a type of statement. And for doing that, all that that being said in PAD and PAM, the criteria, the head of accounts, and the purpose, and for time duration, and what are the blockages that you cannot do this, you cannot do that. That all requirement you have to go through the loan agreement, the agreement for the contract, and the terms and condition papers and everything. So as a auditor, before going to reporting any audit of these ADBs and World Bank projects, be assured on your part that you have gone through all the report and project report the implementing agencies have to do, and the World Bank requirement or the funding agencies requirement. So be assured, and as Uddhava explained beautifully, the background of the ADB projects and everything. I think by this time, who had not been very acquainted with the this World Bank and ADB type of audit has been in the same platform, but others who are doing this audit are already knowledge of that. So I think there's a good job has been done by Sumit. So put us in the same platform. So as the auditor, it is not that you are doing a club audit or you are doing any other audits. Though the statement may be short or maybe a smaller one, which may appear that this is just giving your signature over there, only verifying whether the expenditure has been made or not. But before this, the responsibility is upon the auditor to see that it is the accounting part is done as per the requirement of the development agencies or the borrowing agencies. The borrower will prepare the annual budget financial statement in accordance with the financial reporting standard accepted by the agencies. If they may prepare it on the cash basis, if it is the requirement of the external agencies, or they may prepare in the accrual basis, or in mixed basis. So that is also that can be done. So the audited statement which are included is not only the statement, the audited project financial statement together with the auditor's report thereon. And not only a signature on the statement, it should be followed by your auditor's report. There should be a management letter. There should an additional opinion on the use of the loan procedure, an opinion on the compliance with any financial like linked to the annual projects, financial statement together with the computation of the conference. That means Sumutavada has told that there is one part, only the disbursement or the approval from the loan and the loan received by you is not your expenditure. So for receiving the loan, there may be two or three types of this receivable. One is that you may have some advances, that is for the mobilization of the projects. So if you have taken any advances, means that AE or IA has taken any advance, so you have to look into through it that whether their advances are for which purpose. If the advance is for preparations of the project or for doing some survey among the citizens, then it should be the expenditure made should be made on that platform only, rather than it's advance against the entire project. No, you have to find out for which purpose the loan the advance has been given, and the steps after which completion of which, and the timeline in which it has to be completed. If it is beyond that, you must report that this project was to be completed in say 3 months, but it has now extended to 5 months. Yeah, and the management letter, you also say ask them why they have done this delay. So if they have given any reasonable answer to your query, you can, if you want, you can add in your audit report that on the query they had given this reply, because there is a deviation as per the loan agreement or as per the terms and condition of the funding agencies. So these are also to be given in the report as a whole. So what we do, we are basically doing the audit of the statements as per the international auditing standard or national auditing standard issued by ICI, or certain standard which the CAG has given. And the submission time is for 6 months to 6 to 9 months. Management to provide management asserting letter. Is the management also give their letter to explaining their of the project entity as a whole and their status. So what should be our audit report including? Reasonable assurance opinion should be there. Opinion to include title, accuracy of the borrower, identification of the financial information audited, management responsibility, auditor's responsibility, that is to how part and what are the management responsibility was to be taken by the management, and as a auditor you know what is the responsibility, and expression of an opinion. There should be a signature, date, and authorized report, and the auditor's address, and also this should have the UDIN on that. So as a whole, as an auditor, these are the, in additional, you have to be additional reasonable assurance opinion, modified opinion, or emphasis on matter. So, so I'll take just say three words. Additional reasonable assurance opinion means if you can, if on the basis of true and fair view is based on the test check basis. See on your terms of your appointment. So, so I'll go later go on what are the types of appointment as an auditor you can get in external agencies. Now, taking as that you are been appointed as an independent auditor, which is equal to the statutory part or statutory auditor, who says that you are giving your opinion on the true and fairness of the accounting statement. So, so when coming to this opinion, so you can also have your reasons to believe why you are giving this opinion, that you can say that this is the assurance why you are taking it. You can you can give the modified opinion or emphasis on matter. Sometimes it may not, it may have a red flag on any item, but it is not a, they are not actually a fraud, but it is a red flag. So if you can also give emphasis on this, that this is to be taken care of. You will see that when you are signing the statement, after the this date of the statement, some events has occurred, and you know that that for this reason, say COVID has come in, or some flood has come in, so preparation of road would not be possible. So you can give in your audit report that though the till date, till the time of the audit, the entire financial statement represents the expenditure they are making. But from this time, it has been seen that on physical verification, there is certain emphasis that on which you can say that this is the matter to be reported to the World Bank or external agencies. So other matters and special use of the funding following the relevant legal and financial agreement. If the, you have to see whether the fund following the relevant legal and financial agreement which are entered into by the development loaning agencies and the implementing agencies. The provision of counterfeit fund following the relevant agreement, and that use only the purpose for the project for which the loan was granted. So there may be three or four loans running in that implementing agencies. So you have to go through individually for each of the five the loan papers and the agreement. So when you are signing, the do not club the all the project and give a report. So though it may be a World Bank or maybe a Asian Development Bank, but if it is for different projects, you have to prepare your audit report for individual projects, and you also should take your appointment for individual projects as a whole. Because if you are taking as a whole of all the projects but do not give a composite report, you must give a provision for individual report for the funding or loan agencies project wise. And also the proper books and records are reconciled with the, because basically there will be a reconcile of the audited or unaudited. If there is a process of depositing the unaudited financial statement, so there may be a reconciliation required, because if your funding agency says to be on the cash basis and your implementing agencies are following a accrual basis, so they are required to make a reconciliation on part of the report which their financial statement represents and the statement represents. So there may be a reconciliation requirement. And whether the book, which are the books required, there may be additional books which are required to maintain and has been identified or clarified by the funding agencies. So it is not only that the books of accounts which is as per their law, whether the corporation's law manual or the municipal manual says, but additionally you must keep these books of accounts which are required by the implementing agencies and that and with the disbursement records. And you have to there should be an existence of the project fixed asset and relevant internal controls. So if there should be identified fixed asset which have been created from the projects, and same project, same fixed asset should not be funding from the general fund or any other funds. So that we have to look into from which fund is flowing to the civil works construction contractor, and whether the process has been followed when selecting the selecting the three categories. One is the service, one is the civil contractor, and another is the consultant for primary preparations of the DPS and everything. So that also you have to look into whether their selection process was in line with which this funding agencies has categorized, and they have any they if they have set up that this should be the minimum criteria. So when you are going through not only financial transactions but to selections of these the civil contractors or consultant agencies and everyone, so you have to go through the every bit of the documents. It is not only that you are putting your signature on the statement which represents the receipt and payments, but you have to certify whether the payments are in line in line with which the funding agencies has categorized. So this is not that as a usual we do. This should our auditors report should be as what the development bank or funding banks require. So there may be additional requirement on the part of the funding agencies. So we must be very careful in drafting our audit report, or before accepting our audit report. We must understand not only that as a auditor we appoint to know as independent what we do, but we have to go through the loan agreement papers and terms and conditions and see that what are the additional books of accounts are required, additional statements, additional reporting part. So you must keep emphasis on this, and also under the internal control of the project, and see if if the projects 100% is of 50%, 30% is of the state share, which has been followed again to the urban local bodies. So 30% expenditure should be identified, and that should be categorized, seen that this percentage has been maintained. And as already told, that if there is any deviation, that is to be reported. So even on the funding agencies set 70-30 ratio, if there is any shortfall in the by the implementing agencies, any financial part, which category they have told, because many of the project may be of 4 or 5 different time gap. There may be one project which may run for 6 or 7 years, but there will be different timeline for these projects that may be divided into 3 to 5 segregated part. So for each part, they will say what will be their contribution and what will be the implementing agency's contribution. So be carefully see on that whether they you see you have given they have given 90% from the funding agency's payment, and they had only for say for example, you are having a project of $1,000 million, and for $1,000 million has been separated into 5 parts. So $20 million is the project one completion. You have to find out what are the things we have to do in the project one or first phase. If there's come up with any expenditure which related to the second phase, that is not, auditor should also give clarify it in its report. So we must identify for each project segregation wise or timeline wise what is the allowable expenditure for this phase or this time gap. So there will be clarificatory written whether in each phases the funding agency's part and implementation agency's part. So when you see that it may happen that there is a projection of build a road of that is 70% of $20 million, that is seven the 70 is $14,000. So for $14,000, the actual work was completed in $12,000 million. So now the implement agencies may think that now the project cost has been decreased. So I will decrease my share in contribution and matching, because my entire project is now coming to less from 20 to it come to 14. But before that, we have to look in the terms and conditions, whether the executing agencies part can be adjusted phase-wise or it can be adjusted at the last part. That also should be written in the loan terms and agreement. So you carefully go to the loans and so what is expected from the audit report review? So development partners review the audit service of the to assess it from the timelines of the report, quality of the auditor's opinion, auditor's scope, financial statement reporting policies, audit modification, and other matters addressed by the auditor, and the financial confidence and the implementation of any modification to the auditor's opinion or any material contained in the emphasis matter and other paragraph in the auditor report on particular concern are issued about the use of the budget funds. So these are and the management letter and the management response. These are the requirement of the development partners when reviewing the auditor of the financial statement, budget financial statement. So what are these are the financial constraints in ADB's assisted projects. Financial components are safeguard financial visibility, promote entity financial sustainability, protect interest of ADBs and borrowers, strengthening financial management capacity, and financial performance indicators. These are the financial performance indicator and including legal agreement, which can consequence correctiveness actions sought to be achieved compliance. This is the legal binding. And another is FM convergence and numerical financial cost into ratios, annual monitoring, measurable and monitoring. So these are the financial requirement of the banks. They not only require the audit report, they are also requiring the financial performance indicators and also the legal bindings. And they do not want that any project comes under any legal binding that comes on the project. So legal bindings, they had auditors also must report on that, and these are the measurable and monitoring is one of the part. So FCs identify based on the financial cost benefit evaluation. This is and the financial analysis discussed with executing agencies included in legal agreement. Implementation, borrower responsibility to comply, auditor's responsibility, assurance opinion on financial cost and comparableness of each financial reporting period and to be supported by computation. Completion, borrower performance and compliance and financial assessed. So for think any reporting on the financial components, so you have to the loan processing process, implementing and completion. Sample of certain comments, I don't know whether it is visible or not. That is, except as a will shall otherwise agree, the borrower shall achieve to collect efficiency of each of the financial year, and this has been reported. Even accepted by ADB shall otherwise agree, the borrower shall not in any debt if after the inclusion of such debt, the ratio of debt to equity shall be greater or lesser. So before having this opinion on the financial components, you have to a separate audit opinion to confirm the level of compliance with the financial components stipulated in legal agreement, which is sustainable provided by the implementing agencies or executing agencies on the computations of each such financial convention. The auditors should indicate the extent of non-compliance, if any, with reference to the convention actual performance measured for each such financial convention. Standard of auditing SA 805, special consideration audit of single financial statement and specific elements accounting of terms of financial statement of the ICI in the national equivalent to ISA 805. Special consideration audit of single financial statement and specific element audit and items of a financial statement. Why emphasis is given on single statement? Because ADB may not be requiring your balance sheet they required a single statement of the receipt and the expenditure part. So this is basically A7805, which gives us a detailed idea about the statement, about the audit of a single statement. I do not think we record much go deeper into this. So So another auditing standard which financial government audit opinion is if audit opinion given by CAG. So CAG auditing standard 2077. So if you know that in urban local bodies there are two types of audit. One is the done by the CAG, any government agencies. Statutory audit is done by the CAG itself. For urban local bodies, the CAG does two CAG on behalf of the CAG does two types of audit. One is the transaction audit, another is the balance sheet audit. Say in the transaction audit, if audit CAG has given some opinion regarding the fund, regarding any fund which is related to World Bank or ADB Bank, so you must go through and put it in your report. So if your CAG has gone through any of the report, so you yes, in their opinion by the CAG, you must put in your audit opinion. If private audit registered with ICI, we see there's an internal auditor can always be appointed by the urban local body or the state government or the directorate. So if there is any observation by the private audit firm or which are registered with ICI, so that also should be done. And already also has told that the audit can be of two types. One is by the CAG, basically when fund is being coming to the central government and they are the implement the central government or the state government through central government and they are the implementing agencies, then private audit is not a part of our ball game. It is a part of the CAG to report in that. But if this fund is going below to the state to some other implementing agencies or funding or the executing agencies like that, in ULBs or corporations are getting fund out of this total fund, then they can appoint an independent auditor for audit of this individual fund. So another part I'll go into it, that is the financial reporting requirement. And the auditor has already covered the key accounting areas. So other financial management responsibility are covering. This is approved contractors payment on time. This is the management financial management reporting. So this is your one of the responsibilities to approve, to see that the approved contractors are payment made on time. Then not be any delayed or in time. Whenever the bills comes to the government department, we see that they have a habit that it will be paid in a later time. But as these projects are on timeline basis, if any work is complete, the bill has been submitted by the contractor, then only we ask for the bill register. From there we can find the bill has been submitted by the contractor, but that had not been taken up by the engineering department or the finance department of this implementing agency for their payment. So we have to see whether the contractor is approved and the contractor's payment is approved on time. Ensure compliance with tax law and other relevant laws as applicable. Like if you are under any, if you are GST or any other laws, labor laws, you are making in the project, there are contractual staffs. Even contractual staffs comes under PF criteria. So this compliance you have to see if you are appointing any civil contractor, and if their contractor is not having any provident fund, so you as a primary principal or the principal employer, so you have to see, you have to give your PF contribution. So this, as you know, this project and cost taxations are not included into it. So you have to see how this payment are to be made, whether this payment made for these projects, whether that can be taken as a part of your expenditure of the projects. So these are the areas where certain legal criteria comes into play, and it may happen the ESI, even if certain your permanent employees payment are going through from this accounting. So how is how the gratuity or that period time is calculated and payment are made from your own account, that are also to be taken care of. There should be accounting periodic account closing, which is usually 3 months. Prepare project financial statement, ensure the timely submission of uh, APFS and QPR and fund utilization report. Many of the times auditors have to sign the utilization report. And utilization report is should be not only received and paid. If the utilization certificate should also include the your report part. If you are finding something which has been utilized, this payment has been made, but it is not as per the requirement of the funding agencies. So you have to mention, well, you have to not to take that expenditure as expenditure as a fund utilization report. Many of the times you can see that fund utilization are being made in the urban local bodies on accrual basis, because they are maintaining their accounts on accrual basis. In accrual basis, whenever you are accepting the bill, you are taking that expenditure as an expenditure. But on the cash basis, till the check is being disbursed or the contractor received the bills, means that the from the amount has been already paid out from your own bank account, it is not to be said as utilized. So at the time of the utilization report, you do not based on the payment criteria, and also you have to go through and check the bank statement. And it has been already told earlier that each project should have a separate bank account. So whenever you are giving a utilization report, you must go through the bank's statement, that whether something receivable have not been received, something payable has not been paid. So for giving your fund utilization report, you go to that loan, your term agreement with the funding agencies. What they say, they say that their utilization is on the cash basis, then you have to report in a separate report that this though these checks are been or this good bill has been booked, but till date the bank it is not being paid out of the bank, so it cannot come under fund utilization report. So many of the times we make this mistake. So it is a major part when we issue any not as a auditor. Many of the times for many of the funding agencies come, say university has given a grant, and the teacher in charge comes to you and says, sir, give me a utilization certificate. You then you see that they have the checkbook, you see that they have given the checks already issued, so you give the utilization. But be careful before issuing this utilization certificate. You must be 200% sure that what was the requirement of the funding agencies, and whether the accounting, whether the payment terms are all complied with. And also reconcile the claims lodged with the fund receipt. And it may happen that you have some claims lodged, but it has not been disbursed. So you have to make a reconciliation for the this is on the receiving part, that was on the expenditure part, and this is on the receipt part. So this, as as Smita has already told you, that the funding agencies many of the time does not give amount in advance, or they does not send any money to your bank account. Basically, they give a technical approval on the basis of which you have to make the expenditure and then claim it to the funding agencies. And this, after claiming, there would be a certain time gap before, within which the funding agencies are disbursing your amount directly to the contractor, or it may be giving to you, and if it is not that it is given to the contractor, because this type of funding you have already paid to the contractor. That was the old method. New method you have already paid, and now you are claiming the expenditure. So if there is certain expenditure which has been disallowed by the funding agencies or the ADB banks. So you have to see that this is not an expenditure. You have to disallow that expenditure on that part. As a certain reconciliation is also required for the claim lost and the claim that has been disbursed. So what is the financial reporting requirement? Cover project cost expenditure from all sources of funding, irrespective of the eligibility of funding by the development partner. So cover total project expenditure from all sources of financing. It means it is not that the World Bank has given 70% of the fund. Or ADB Bank has given 70% of the fund. So you are only giving that expenditure made out of the 75%. No, any fund, whether in the nature of funding by the funding agencies or in the nature of government contributions, the total project expenditure from all sources of funding means here if the $200 million is the project cost, out of which 70% means $14 million is of the World Bank, and 30 and is 6 is of the state government. So the expenditure made of the total projected cost of $200 million is not that only $14 million amount. It is on the basis of the $20 million, that is the project cost. Then is the reconciled fund received from developer partners and the financial data on loan disbursement every year during implementation. There must be a reconciliation fund received from development partners and the financial data on loan disbursement. Means if the loan is of a term type of loan, means it is, or it may be on the based on the trigger base of the completion of certain projects, certain category or certain time gap. So fully reconcile the developer partners disbursement at the time of final audited financial statement submission. It is so at the time of audited financial statement you are submitting, you must fully reconcile both of the development partners disbursement. Development partners require an audited financial statement to be presented in English for each financial reporting year. Why they are emphasis? See, our state domicile, they may be state government, may be keeping the books of accounts in their state languages. But for development partners required as this audited financial statement in English only, and is for each financial reporting period. The financial reporting must be annually starting from the loan effective date, or if the applicable revocation financial start date and ending on the financial closing date. That means 31st March is our financial closing date, and your audit period starts from 1st of April to 31st March. But if you are start reporting, if the effectiveness of the fund coming at the mid of the period, say from October, so now your applicable is from October to 31st of March. And if the project is completed by any time before March, your period should be 1st April to the period up to which the project expenditure was being made. So there should be notes on accounts and supplementary schedule like the inventory, long-term debt, accounts receivable and accounts payable, reconciliation with disbursement, detailed disclosure on specific head of project expenditure, and calculation of financial conversions. So supplementary schedules are inventories. That means if you are into a civil work, so in civil work you can find that inventories, WIPs are there, or even any of the civil works there must be an inventory at the end of the auditing period. So the closing stock or the value of if it is on the government project, they are preparing their accounts on the cash basis. So you have to have the taken the stock on the year end in a report on 31st March, and should be a part of the supplementary schedule. There can be long term debts. If you are taking any loan from this is a long term debt. And if there is account receivable, means you have the loan is a debt to the to the concern. So when there, if it is a grant, then it is not a debt. But when it is a loan can be interest bearing or may not be interest bearing. So it is a long term debt because loan comes for 20 to 30 years, 35 years period. So this is a long term debt. So that should be clearly specified, and what is the amount sanctioned and how much it has already been disbursed. So as earlier it was clarified that one thing is disbursed and one thing is expenditure. So this schedule of long-term debts required the what is the long-term amount has been sanctioned, and till date what is the date till the amount you are taking the amount into your account, then it is a sanction amount, not your long-term debts. So an accounts receivables and accounts payable. So accounts receivable is that the bills which you have submitted to the implementing the development agencies, and the accounts payable is that we have taken help of the job has been done, but we have not yet made the payment. So see, these schedules should be there, and presentation should be currency. Presenting currency should be NRI, but if this give emphasis that you should prepare this statement as for their currency, then you must go through. You have to reconcile that also and convert that from the presentation currency. You must be sure what was the currency rate and the date of signing on the balance sheet is on the end of the financial balance sheet. So, so this is another thing which have to look whether reporting is based on that. Reconciliation development partners, disbursement data already told. So, and to go deeper into it, not given in slide, I'll take some of the thing in addition. So, what are the basic requirement is the depend on the your appointment depends upon the nature of the project, type of project, amount of financing, and the specified risks identified. So, in the scope of audit, use of funds for internal purpose and their eligibility for financing is you have to go check it. Compliance with requirement in the legal agreement which have already told provision for counterpart funds. Following the relevant agreement, counterpart funds means 30% of the state government or 50% of the central government. Internal control. This is a major area you have to report. Internal control assess and inaccuracy and the effectiveness of the internal control and identify the weakness in the internal control. That is, I said, additional comments are there based on project to projects. So, so there are certain types of audit. It is not that always there should be a stat audit or there should be a financial audit. Other than financial audit, there is a performance audit, the value of money audit, operational audit. These are operational. These are all performance audit. There can be compliance audit. There can be internal audit. There can be technical audit. There can be social audit, and there can be environment audit, and there can be forensic audit. So these are the scopes where us as a professional CS, there's huge scopes of types of audit for these type agencies and their appointment. So there are two types of thing. One is a appointment to the auditors for the companies incorporated in India. Means when any company incorporated India, they are having this as a implementing agencies. So or CAG appoints the auditor for the CAG panel. The CA to be a private CA to be an auditor if the executing agency is a company incorporated in India. If it is by the state or the central government, it is taken care by the CAG. And if the other statutory bodies, urban local bodies, and societies, auditors are generally appointed by the implementing agencies. And then SKCs are maintained for the your appointment also, not only for the supplier or those of the civil operator. So there are certain minimum eligibility for agency currently following the quality and cost-based selection method. The bidder must be registered with the institute. The bidder must be empaneled with CAG. The firm and the year of establishment of the firm, existing of partners and staff, firms in independent to the project to be audited. Means I have told you have two scope. You can be acting as a PMU or as a consultant for the firm. So if you are being appointed as an auditor, so you cannot be associated or partners or of your staffs cannot be associated with the funding agencies, with the deployment agencies or implementing agencies in other capacity. Years of association of partners of firm who are turnover of the firm, location presence of the firm, ability of firm to assign audit and their audit approach and their how they have done. So this is the method how auditors have been appointed on the quality and cost benefit selection. The two type of the two-way method. One is that the criteria for the eligibility criteria for the chartered accountant. Another is that of the cost they are required to have this work done. So first they are evaluated as per their performance, and then they are evaluated by the as per their cost they have quoted for the job. Compliance is also required. So compliance, you have to check through the compliance thing means statutory details like the contractors, the PAN, tax, TAN, and the GST registration, CI registration, and like for the companies and others. So you must follow the KYC norms of all the contractors or the suppliers, and then for the auditors engagement, they issue the engagement letter as per SA 210. And by the way, I am not getting into the details of the ACs, but I can say the SA 200, you can go to SA 200 is a helpful provisions for that, and is and SA and also SA 210, SA 300. So these are the operating standard which can be helped and not narrating the accounting standards. So you all are acquainted or very knowledgeable of this operating and accounting standard. So they say 315, you can take a note 315, 320 for risk management, 320, and also so 320 operating standard risk and in specific preferences. So you can use a loan purpose or so with this these are the brief thing because I think we are at the end of the session. So had Sumit has already made a declaration at the starting of the his presentation. So I'll take this disclaimer at the end of my session, as this has been collected from different sources, and it is my opinion and my views, and it is not necessarily the views of ICI or any branch of ICI or the members of the Government of Authority of India. Thank you, sir.
Thank you very much, Suman sir and Sumitaba sir, for your views. Sir, there are few questions from the participants. Uh, can I take them one by
Yeah,
one, sir?
if I can, I'll already do it. Or if it
And
is
I
a
think
matter of
Sumitaba sir is there.
Smith of the sir
Uh,
is oh yes,
Yeah,
sir is
I'm
there.
very
okay,
much there.
sir. Sir, one of the participants has asked, is there any global entity supporting water and rainwater conservation activity on big scale in India? Am I audible, sir?
Yeah, very much. Oh, there are, I don't know of any entity like that because we had been talking about all funding agencies, but rainwater harvesting, water conservation, etc., are all being supported by World Bank. They have a pillar, they have a vertical, you can say, a vertical on these aspects. World Bank does, ADB also does. Like I said, I gave an example of a ADB project that is going on in West Bengal in public health engineering. They are trying to relocate the a new source of water because people had been drawing or extracting groundwater which has been infected by fluoride. Salinity has increased. Now why salinity increased? Areas which are near to the sea coast, because of the rising sea level, this water gets mixed up with the river water, because usually river water flows into the sea water. But when the sea water rises, the saline water moves in, and that has made the areas around those rivers very saline and is not fit for consumption. So ADB is supporting government of West Bengal to shift the water source. Water conservation, rainwater harvesting, these are part of all funding projects. But an institution worldwide looking after this, I am not aware of, to be honest with you. Thank you.
Okay. Another question is, sir, as SOFR is high due to increase in Fed rate over the last few years, is it advisable to take ADB or World Bank disbursement in yen?
There is a system. There is no bar. Actually this issue came up when I was in Bangladesh, because in Bangladesh also the SOFR has come, and obviously SOFR rate, as you said, rightly said, it is linked to the Fed rate. So Fed rate has gone up, which is so in totality basis, SOFR is much higher than LIBOR. LIBOR used to come at 2.753 to 2.5, but SOFR is coming at around 5. Now, if you go by the financial prudence, SOFR loan is not actually very financially prudent. Okay. But there are possibilities where the loan can be taken in JPY or in other currencies. And if it is JPY, then toner comes. What we call the toner, that is a JPY rate, it is still cheaper, because JICA loans are much cheaper than SOFR loans or any ADB loans now. So, I mean, this is still on the drawing board. I had a discussion with some people in the Ministry of Finance that what can be done. We have gone through the documents, but this needs a more think tank process. I mean, I'm not in a position to say anything, but there are options there. But it is definitely increase the. It is not only the impacting India, but many countries, and which are small countries like say Bangladesh, because SOFR is much higher than LIBOR rate.
Okay.
Thank you.
Thank you very much, sir. I don't think there are any more questions. So I would request Seema ma'am to kindly address a vote of thanks. Seema
Yes,
ma'am.
sir. Yes, sir. So good afternoon to all our viewers. And since all good things have to come to an end, I would really say that we come to the end of this webinar. So on behalf of the Committee on Public and Government Financial Management, first of all, I like to thank both our resource persons. Sir, your presentations were excellent and it was very useful. We got a lot of feedback from members also who found this webinar to be very informative. We really understand that you have put a lot of work into it, and I'm very sure our members would have benefited. So thank you, sir, to both of you for putting so much of efforts into it. And we are extremely honored and privileged for your time and for your guidance. So I'll also like to thank mainly our moderator, sir. Sir, your Arun Gupta, sir, your presence was a great good thing for us, and the webinar was very informative because of you. And thank you, sir, that you spared your time throughout and you were there in the webinar. So I will also like to thank on behalf of the office our chairman Mangesh Kinere sir and vice chairman Pankaj Shah sir, whose guidance and support helps us to come to these new topics and we hold this webinar. And on behalf of the committee, I'll also like to thank the World Bank and the ADP who supported us in coming out with a new module and whose idea was there that this is a very important subject and we should come. And they are continuously in touch with us on this subject. And then I'd like to thank all our viewers who, especially I know at a 10 o'clock being a busy day, but in fact, they participated in very large numbers. We hope and that we will continue to have such kind of webinars. Thank you to all. Thank you. And I just like to clarify that the 3 CPRs which we are given will be unstructured CPRs. So somewhere I think there was a doubt, and these CPRs will be unstructured. Thank you to all.
Simaji, I have a
Thank you.
question.
Yes, yes.
Two questions,
Sure,
rather.
sir.
Where is the coffee?
Sure, sir.
Where is the coffee
Where
and
is the
snacks?
Sir,
So
yeah,
these virtual meetings are not good for us. We are missing our
yes,
coffees.
yes.
And number
So
two,
I'll all,
being members, are we also getting CP hours?
definitely,
Yes.
sir,
So please give our
definitely.
CP hours also.
Yeah, sure, sir, sure, definitely,
Okay,
sir.
so these two
And we
questions. Now,
will look,
thank you for this
we will
opportunity.
look,
This is a
and we will
niche
look,
area. This is a very good thing that you people
yeah,
organized on this. And
right,
I am also honored to address so many members at the same time. Arun Gupta ji was there.
yes,
So it was
sir,
a good occasion for me also to talk because I had been working on this. But yes, I took
right,
a lot of time. In fact, almost 2 days to compile this thing because I had been working. This was not a presentation. I had been presenting on
right,
accounting and municipal accounting. They're all ready. So yes, it was
right,
a
right.
good occasion for me to do the research also. Thank you. Thank
Yes,
you.
It was
and we
really
look forward
informative, sir.
for having a
Thank
coffee
you.
together, sir, all
Yeah,
of
Yes.
us. Yeah,
definitely.
we look forward for your
Thank you.
presence in Delhi.
Thank you.
Thank
Thank you,
you.
madam. Thank
So
you.
much,
Thank you,
sir.
sir.
Thank you,
Thank
sir.
you.
Thank
Thank
you.
Thank you, ma'am.
Thank you, sir.
Thank you,
Okay,
Gupta
thank
ji.
you so much, Jyoti sir. Thank you. Namaskar. Thank you. Thank you.